So let's begin, guys. In this session and in the next session, we're going to be doing 2 sessions today and tomorrow. Across these 2 sessions, we are going to be working out 30 questions on income tax. Okay. And it is so nice to see so many of you attending the session live. We have around 280 students live, which is very, very nice to see. Stay all right till the very end. We're going to be doing good number of questions. Again, just like how we did for law, okay, same way, these 30 questions are not random 30 questions. They are all ICI questions. I have not picked questions from private authors or from other materials. All these 30 questions, if you're going to be working out, they're all ICI questions. Some of them from the study material, some of them from RTPs, some of them from the mock test papers, some of them from the past examination papers, and I have also brought in some questions from the old syllabus. Okay. Now, the thing is that why have I brought in some questions from the old syllabus? Because at least the last 1 or 2 attempts, I have been noticing that some questions are copy paste from the old syllabus. If not the whole question, at least some adjustments are copy and pasted from the old adjustments. From the old syllabus, understanding. So therefore, some of those questions also I have brought in. And the questions which I have brought in are since 2018. So you will find some very old questions also as we discuss these questions. All right. Now we will be going chapter wise. All right. We will be going chapter wise one after the other. We will be starting off with total income. I know you must have thought the total income will come towards the end, but I want to start off with total income because here itself multiple questions will get covered. And please know that this session is going to be conducted assuming that you've already learned, you've already done a revision, and this is only like a top-up revision that you're doing. Okay, so because time is a constraint, I'm not going to be going into the explanation of the concepts. All right, I'll be working out the question with you, just like how you would be working out on your own. I will be working out with you. All right, that's how we're going to be doing this. So it'll be slightly fast paced. There's not going to be too much explanation or too much discussion here and there, but knowing myself, I will end up doing it. I know it for sure, but still I will try to keep it as concise as possible so that we are able to comfortably finish all of these 30 questions. All right, now this question is going to be like how I told you. Yes, it will be uploaded onto YouTube, so you do not have to worry. The same session what I'm going to be doing now, I'm recording it, same thing as it is, we will be uploading it on YouTube as well, so you don't have to worry about it. Okay, but that doesn't mean that you can leave. All right, stay as much as possible. All right, make sure that you attend it live as much as possible. All right, just give me a moment. Let us take up the first question. The first question in front of us is a total income question. And one more thing before I start. See, the questions which I have picked up, my objective is not just to boost your confidence. Okay, if my objective was just to boost your confidence, I would have brought in all these 30 questions, simple 30 questions. That is what I would have done, so that you feel nice and confident. Okay, I know everything. But tell me, will that serve the purpose? That's not going to serve the purpose, right? If you're going to spend these 6 hours with me today and tomorrow put together, it might as well be in such a way that we learn something out of these 2 sessions, right? So each of these questions will have something for you to learn from. Each of these 30 questions will have some challenge here and there. So just because you come across a challenge, immediately don't get disappointed that, oh, I thought my preparation was amazing. How come I don't know this? Immediately do not go into that thinking. Understanding, everybody, you understood what I'm telling you? This is something which I want you to keep in mind, that yes, you will find something challenging in each of these questions. That's the whole point of working these questions out, right, guys? Tell me, 10 days before the examination, if I'm going to work out 30 simple questions for you, will it even make sense? No, you will only feel nice and confident. Okay, I know everything. But do you actually know everything? It only be fake confidence. Right? So that is the reason why whatever questions I've brought in over here, I have not brought in even one simple question. Each question will have something really interesting for you in each of these questions. All right. So let's begin. Let us start off with the first question, that it's a total income question. Nice big total income question has been given to us over here. What are they asking us? Compute total income and tax liability in the most beneficial manner, guys, in the most beneficial beneficial manner. Most beneficial manner means what? Most beneficial manner means what? Normal tax rate we will calculate, 115 BAC we will calculate, and out of these two we will pick whichever is the lesser number we will pick. Okay, see, always remember one small thing. Okay, whenever you are asked whichever is the most beneficial manner, whenever you come to the tax liability calculation, keep this chart in your mind. You will see what is a normal rate and you will see what is AMT. If you're noticing in this question, are they even talking about AMT? No, they are just saying compute total income and tax liability in the most beneficial manner. 100% students will forget about AMT. They will not talk about AMT. You only have to remember things like partial integration method, things like AMT, they will not talk to us about. We only have to remember. So normal rate AMT, we will see what is a normal rate tax, what is a AMT tax. Out of these two tax, which number we have to pick? We have to pick whichever is higher. Okay, so we will have the higher number. We will compare this higher number with 115 BAC tax. Out of these two tax, we will pick whichever is a lower number. Keep this chart in mind. So normal rate or AMT, whichever is higher, this number will become your normal tax. Okay, a normal rate tax or AMT tax, whichever is higher, this will become your normal tax. This normal tax or 115 BAC, whichever is lesser, this is going to be the amount which you should be paying to the government. Okay, keep this basic chart in mind. Now, looking at the question, how do you handle a total income question? Just by the face of it, it's very obvious it's a total income question. I will not waste time reading the whole question and all. It will unnecessarily overwhelm me. So I'll straight away see what exactly they're asking me. Total income and tax liability is what they are asking me. So therefore, I'll just look at I'll just straight away start off with the answer. Now, they're asking me total income. So let us say this is going to be my main answer. Now, as I come across adjustments, I'll keep making the necessary working notes. I'll keep doing the necessary calculations. All right. Now listen, looking at the question, Mr. Kamal, having business of manufacturing of consumer items and other products, gives the following trading and P&L account for the year ended 31st March 2022. So which means we are doing the calculation for previous year 21-22. We are doing the calculation, which means assessment year 22-23. We are doing the calculation. Okay. Now assessee is in the business of manufacturing. So because the assessee is in the business of manufacturing, in your entire CA Inter Income Tax syllabus, if your assessee is in the business of manufacturing, the only special provision which you have in your intermediate income tax syllabus is additional depreciation. There is no other special point for manufacturing assessees in your syllabus. See, actually there are many more special points for manufacturing, but in your syllabus I'm talking about only one special point you have if your assessee is into manufacturing, which is additional depreciation. Okay, they have given us the trading and P&L account, which means assessee will definitely have PGBP, guys. So I'll write down PGBP over here. Let us say working note number 1. Now I leave some gap. I'll open working note number 1. I'll give the heading PGBP. Now listen, to compute PGBP, do I have the net profit number with me? Yes, I have the net profit number. So because I have the net profit number, how will I compute PGBP? The 5 steps will come to my mind. What are the 5 steps? Net profit as per P&L account. Then what do we add? As usual, guys, your usual steps. We'll add expenses which are debited but not allowed. Then we'll add incomes which are not credited but taxable. Then we'll subtract expenses which are not debited but allowed, and finally we'll subtract incomes which are credited but not taxable. Okay, so I've made my basic format for PGBP. Now coming to the question, my assessee is in the business of manufacturing consumer items. Sales, anything to do about sales? No. And if you look at the sales number is more than 2 crore. So definitely section 44 AD presumptive taxation is not going to apply, which means normal PGBP calculation I have to do. Sales number, turnover number is more than 2 crore. So therefore no 44 AD presumptive taxation. Closing stock, nothing to do. Gross profit, nothing to do. What about income tax refund? Is income tax refund a PGBP adjustment? No, it is not my business income. So I have to remove it from PGBP. So how will I remove it from PGBP? Less income credited but not taxable. Under this, we have income tax refund. How much income tax refund do we have? We have income tax refund of 30,000 rupees. This I will remove from here. Okay, will I take it to any other head? Will it be taxed under any other head? No, it's income tax refund. Income tax refund is not taxed under any other head. Had it been interest on income tax refund, that you would have taxed under which head? Interest on income tax refund, that you would have taxed under IFOS. This is not interest. This is only income tax refund. I will not take it to any other head. Warehousing charges. Anything to be done about warehousing charges? Nothing as of now. It's your normal business income. Coming to the debit side now, opening stock, purchases, freight and cartage, gross profit, nothing to do. Bonus, rent of premises, office rent, guys, advertisement, bad debts. Bad debts, we'll assume all conditions are fulfilled. We'll assume that the bad debts relates to something which was earlier included as income. We'll assume that the bad debts have been written off as bad in the books of accounts. So we'll assume all our conditions relating to bad debts are fulfilled. Interest, depreciation, we'll assume this depreciation is as per Income Tax Act. Goods and service tax demand paid, GST paid. GST is allowed or disallowed? Should I do anything about GST? No, GST you treat it as a business expense and you allow it. Had it been income tax you would call it as a personal expense and you will disallow. But GST business expense you allow it. Miscellaneous expense, let's assume all business related. Net profit for the year is how much? Net profit is 50,85,000. That I will write over here. Did you notice, guys? I did not even spend time reading all the adjustments. I am just going through the question. As I go through the question, I'm going to keep making the necessary adjustments here and there. I am doing the thinking with you, just like how I will do the thinking in the examination also. In the examination, if I'm going to spend time reading the whole question, unnecessarily I'm wasting time. Okay, so especially when it comes to a total income question, it is not required to read the question fully and then work it out. As you go through the question, you can keep making the necessary adjustments. It is more than sufficient. Now coming to the adjustments, look at this. Income tax refund includes amount of 4,570 interest allowed thereon. What about this? Income tax refund includes 4,570 interest on income tax refund. So we have already disallowed we have already removed the whole income tax refund. We have removed it fully. We have removed it from where? Fully we have removed it from PGBP. We did not take it to any other head, but they are saying 4,570 is interest. What will I do with this 4,570? I will take it to the IFOS head. So first of all, in my total income, I'll have to open another head for IFOS. Let us say working note number 2. After my PGBP working note, I'll open working note number 2 with the heading IFOS. Under IFOS, we have interest on income tax refund. How much interest do we have on income tax refund? Interest on income tax refund, here we have 4,570, guys. So this is the number which I'll put over here. Interest on income tax refund. Okay, done. Then what else? Look at the next adjustment. Bonus to staff includes an amount of 7,500 relating to 2021 paid in the month of December 2021. Let us try to understand this. My current year is 21-22. Here, if you see, we have bonus to staff 71,250. About this, they are saying the 71,250 includes 7,500 relating to 2021. What is my current previous year? 21-22. So this is earlier year's bonus, guys, but it is paid in the month of December 2021. See, it belongs to 2021. So for 2021, and it is bonus. For bonus, which section will apply? For bonus, is there any section that comes to your mind? 43B. Here 43B is the adjustment involved. Section 43B will come into the picture over here. And under section 43B, you're supposed to make the payment of bonus within 139(1) due date. Now for 2021, if you see, the latest possible 139(1) due date is what? The latest possible 139(1) due date will be 30th November 2021. Latest possible, right? Now, when did assessee make the payment? Assessee made the payment on December 2021, which means assessee has definitely made the payment after 139(1) due date, which means in 2021, you would have disallowed it. You would have disallowed it under 43B because you did not make the payment within 139 due date. But however, you have made the payment in December 2021. 43B disallowance is a reversible disallowance, which means later when you make the payment in that year, it will be allowed. So December 2021, you have made the payment. Which year is December 2021? December 2021 will be previous year 21-22, which is current year. So current year, will I allow it for you? Current year, I will allow it for you because current year payment is made. So therefore, it is allowed and it is already debited into my P&L account. So is there anything left for me to do? Is there anything left to be done? Nothing is left to be done. Did you understand this adjustment, everybody? This bonus relates to 2021 year. It relates to an earlier year. In that year, within 139 due date, I did not make the payment. So, of course, in that earlier year, it would have been disallowed for me. But now I have made the payment. In December 2021, I have made the payment. In current year, I have made the payment. Therefore, in current year, it should be allowed. And the question says that the P&L already includes this number. Because it already includes this number, is there anything left for me to do? There's nothing left for me to do. So this adjustment gets over right here. Tell me, till here everybody is clear? Yes, come on, participate. Now you're not going to watch the session like when movie is going on. Come on, participate. Use that chat box. Till here, are we clear? Yes, guys. Now come to the third adjustment. Advertisement expenses include an amount of 2,500 paid for advertisement published in the souvenir issued by a political party. The payment is made by way of an account pay check. Now tell me about this. Advertisement 2,500 in souvenir. It is in a souvenir issued by political party. Tell me PGBP point of view. PGBP point of view, this advertisement number includes 2,500 towards political party publication. So PGBP, first of all, I will disallow. You know it. In PGBP, I will disallow. I'll add back advertisement in political party souvenir. I'll add back. What is the amount? 2,500. Okay. Now listen. I will take it to which section but? Political party, which section comes to your mind under chapter 6A? Immediately, see, listen carefully. There are two sections for political contributions, ATGGB and ATGGC. Okay, now here my assessee is an individual. For individual, which section will apply? For company, which section will apply? ATGGB will apply for companies. ATGGC will apply for all other assessees. So first of all, right now, my focus is only ATGGC. Now, ATGGC includes payments which I make to electoral trust. ATGGC includes all political party contributions that I make. Same 2 points are there in ATGGB also. Okay, but in ATGGB, there's one more extra point, which is advertisement. Advertisement in souvenirs, magazine, newspaper of political party, even that comes under ATGGB. But tell me, does this point come under ATGGC? It doesn't come under ATGGC. So therefore, my assessee is an individual. To this individual assessee, ATGGC is applicable. So this advertisement expenditure, will I get a deduction under chapter 6A, everybody? I will not get. Had my assessee been a company, under ATGGB, I would have given. But my assessee is not a company. My assessee is an individual. So therefore, ATGGC is applicable. And under ATGGC, advertisement is not covered. So therefore, sorry, assessee, I can't give you chapter 6A. Story over. Coming to the fourth adjustment. Miscellaneous expense. Remember, we had miscellaneous expense in the P&L account, 7,88,475. This includes, this is a very interesting adjustment. I want everybody to answer as soon as we are done with this adjustment that what according to you should be done. Miscellaneous expense includes 15,000 paid towards penalty for non-fulfillment of delivery conditions of a contract of sale for the reasons beyond control. What to do with 15,000? 15,000 penalty paid for non-fulfillment of delivery conditions of a contract. What to do? This is a penalty. So should I disallow it? No, I should not disallow it. I should allow it. Amazing answers, guys. Most of your answers in the chat box are perfect. Very, very nice. Listen, if you were able to answer this correctly, be super proud of yourself. See, penalties are generally disallowed. Do you agree? Generally, fines and penalties are disallowed. But when are fines and penalties disallowed? Only if I breach the law. If I violate a law, and for that violation, if the government is going to levy a fine or a penalty on me, that is going to be disallowed. But tell me, here, did I violate a law? I did not violate a law. I only breached a contract. This penalty is nothing but damages for breach of contract, isn't it, guys? Are you understanding? This penalty is nothing but damages for breach of contract. All this we don't disallow. Only if I breach the law, only then you will disallow damages and penalty for me. Here I have only breached a contract. So here whatever penalty I have paid, it's not going to be disallowed for me. It's going to be allowed only for me. It's already debited in the P&L under miscellaneous expenses. Anything left for me to do? Nothing left for me to do. Then amount of 1 lakh paid to political party by check. What about this? Guys, miscellaneous expenses includes 1 lakh paid to political party by check. First of all, in PGBP, what will I do? In PGBP, I will disallow because political contribution, guys. So in PGBP, miscellaneous expenses, guys, don't worry, okay? This classroom notes where that you're seeing, in which I'm doing all this working, this PDF that you see in which all the questions are there, all this will be sent to you after class. Do not worry. For now, just focus, okay? So miscellaneous expenses, political party contribution, 1 lakh, okay? That number I will disallow, but I will take it to which section? Tell me correctly, which section will I take it to? I will take it to section 80 GGB or GGC. Assess is an individual, guys. I will take it to 80 GGC. So I'll open another working note. I'll open another working note for chapter 6A, okay? And under this chapter 6A working note, I'll write down section 80 GGC and I'll put this whole 1 lakh. Now answer two simple questions. Here, assessee has made the payment by check. Is it okay for you? Yes. Does it have to be account pay check necessarily? No. It under 80 GGB and under 80 GGC. Listen carefully. Revision time. Under 80 GGB, 80 GGC, in both the section it says that you have to make the payment in non-cash mode. Tell me, do you have the 2000 rupees number limit here? Do you have the 2000 rupees number limit here? You don't have the 2000 limit, irrespective of the amount. Even if it is 100 rupees, you have to pay in non-cash mode assessee. If assessee has complied with it, assessee has paid by check. So therefore, non-cash mode condition fulfilled. Story over. Perfect till here. Are you ready for the fifth one? Come on, guys, look at the fifth adjustment. GST. Remember, we had GST amount over here in our P&L amount. So in our P&L account. So that GST information they are giving us. GST demand paid includes an amount of 5,300 charged as penalty for delayed filing of returns and 12,750 towards interest for delay in deposit of tax. One by one, we will go. GST penalty, allowed, disallowed. GST penalty will be disallowed because it's a penalty. So therefore, I will disallow. So we have GST penalty. Now this penalty, if you see, breach of law, violation of law, therefore I will disallow. What is the amount? 5,300. This I will disallow. But guys, what about this 12,750 interest for delay in deposit of tax? What about this interest? What about interest? What about interest? Now listen. Looking at the chat box, looks like you all don't have clarity about this point. Listen to me. Whenever you pay interest, okay, just 2 minutes it will take. Listen to me. Whenever you pay interest, you will see, is this interest relating to GST or any other indirect tax, or you will see, is this interest relating to income tax? Income tax, like for example, you have 234 ABC interest, you have interest for late payment of TDS and all that. If it is income tax relating interest, then you will always disallow it because it will be considered to be penal in nature. But if it is GST related interest, it will always be allowed because we will consider it to be compensatory in nature. So GST interest is allowed, income tax interest is disallowed. Okay, now in this question, we have interest relating to GST. So allowed or disallowed, guys, you know now. Interest relating to GST is going to be allowed and it is already debited in my P&L. So anything left for me to do? Nothing left for me to do. Story over. Now coming to the sixth adjustment. Mr. Kamal, guys, star adjustment of this question. Listen carefully. Mr. Kamal had purchased a warehouse building of 20 lakh rupees in the rural area for the purpose of storage of agricultural produce. Does some section come to your mind? Amazing, Shana. Look at the speed. Beautiful. Which section comes to your mind, guys? Section 35AD should come to your mind. Right, guys, because assessee is having a warehouse for storage of agricultural produce. This becomes a specified business, section 3580. Two warehousing facility we have: warehousing facility for storage of sugar, warehousing facility for storage of agricultural produce. Both will come under 3580. Now tell me, under 3580, which three expenses no deduction? Land, goodwill, and financial instruments, right? Land, goodwill, financial instruments. Now continue reading. So Mr. Kamal had purchased a warehouse building. Building cost was how much? 20 lakhs. This was made available for use from 15th July 2021. Income from this activity is credited in the P&L account under the head warehousing charges. So they are saying that this warehousing charges over here is income from this warehouse only. Anything to be done about the income number? No, it's anyways income. It's anyways income from this business. So of course you will credit it to the P&L. Nothing to be done about that. But what to do about this 20 lakhs number? What to do about this 20 lakhs number? Don't you think I can give this as a deduction under section 3580? It's going to be allowed, right? I can give this as a deduction under 3580. And one more thing, if you notice, what is your warehousing charges income? 22,50,000. Are you getting a loss because of 3580? You're not getting a loss because of 3580. See, had there been a loss from specified business, you would have adjusted it only against income from specified business. All those complications would have started arising. But here, if you see, from warehousing business, you have 22,50,000 income, and you have 20 lakh only which you're spending for the warehouse building, which is within 22,50,000 number. So are you having any loss in the specified business? No loss in the specified business. So this 20 lakhs you can allow. Does it make a difference to you? It is in the rural area. Doesn't make a difference to us. It is in the rural area. Does it make a difference to us that when did we start using it? Tell me, when did we put the asset to use? This concept is relevant only to which point? When did we put the asset to use? That is relevant only to depreciation. It doesn't matter when you put the asset to use in 3580. It doesn't matter when you put the asset to use in scientific research. It doesn't matter when you put the vehicle to use in 44AE. Are you understanding? 44AE, presumptive taxation of vehicles. In nothing else it matters when you put to use. When did you put it to use? This is a concept which is relevant only for one place, and which is depreciation. Okay, so anyways, over here, 20 lakhs I can give as a deduction. It is building. Had it been land, I wouldn't have been able to give deduction, but building is allowed under 3580. Tell me, where will I subtract this? Less expenses, not debited but allowed. Here I can subtract. I can call it as warehouse building. I am giving a deduction under section 3580. See, this is a capital expense, but still under 3580 I will give a deduction. I'll give a deduction of 20 lakh rupees. Okay, then coming to the next adjustment, depreciation under Income Tax Act works out to be 65,000, which means this depreciation is not as per Income Tax Act. So what do I do with this depreciation? I'll remove this depreciation from the P&L. So depreciation as per P&L account is how much? 1,07,250. I'll remove this, and instead what will I subtract? I'll subtract depreciation as per Income Tax Act with section 32. So depreciation as per Income Tax Act is 65,000. I've subtracted this. Then what else? Now listen to this adjustment. Very important, okay? Interest on loan. Remember, we had interest on loan over here, 2,51,250 interest on loan. Interest on loan includes an amount of 80,000 rupees paid to Mr. X, a resident, on which tax was not deducted. Guys, they are saying that we have paid interest without deducting tax. Immediately, which section comes to your mind? Section 40A1 and section 40A1A. These are the sections, right, which talk about non-deduction and non-payment of TDS. Now listen to me. Out of these two sections, in this adjustment, which section should I think about? Are they talking about payment of interest to non-resident? Are they talking about payment of interest outside India? No. So 40A1 will not apply. Instead, which section will I talk about? 40A1A I will talk about first of all. But listen, just because they are saying that tax was not deducted, will I blindly disallow 30%? Okay, I know that 40A1 I will disallow 100%, 40A1A I will disallow 30%, but just because they are saying that tax was not deducted, will I blindly disallow? No, I will first check. I also know about TDS. I have also studied the TDS chapter. No, so first of all, I will check, is TDS even applicable to that transaction? Only if TDS is applicable, but still did not deduct tax, only then you will disallow. No. Think logically. Yes. So tell me, interest on loan. First of all, tell me in TDS which section applies. Come on, come on. In TDS, which section applies? In TDS, section 194A applies, guys. 194A, all interest other than interest on securities. Under 194A, what does this section say? How much can I pay without deducting tax? How much can I pay without deducting tax? If bank is paying interest to a senior citizen, the limit is 50,000. If the bank is paying interest to a non-senior citizen, the limit is 40,000. If anybody else, if a non-bank is paying interest, there what is the limit? There the limit is only 5,000. Here non-bank assessee is paying interest, limit is 5,000, 80,000, guys, more than 5,000. So is TDS applicable? Yes, TDS is applicable. TDS is applicable, but I did not deduct tax. So come on, disallow. Disallow under 40A1A. How much will we disallow? 30% we will disallow. But tell me, is this also a reversible disallowance? Yes, which means later, once we rectify the default means what? Later, once we have deducted and remitted the tax in that year, it's going to be allowed. Okay. Right? So come on, let us go ahead, let us disallow. Add expenses debited but not allowed. Interest on loan under section 40A1A, I am disallowing. I am disallowing 30%, guys. 80,000 into 30%, that's going to be how much? 24,000 I'm going to disallow. That's it with all my adjustments. Now, can I go ahead and find the net number? What is my total PGBP? What's the total PGBP of the assessee? Come on, go ahead and calculate. How much do you get? You get this number 32,29,050. This becomes the PGBP of the assessee. So I'll put it in my main answer now. 32,29,050. Then what are the other working notes? We have IFOS. IFOS we have only 4,570 only we have under IFOS. Nothing else we have. Any other head of income? No. So what is the GTI of my assessee? GTI of my assessee is 32 lakh 33,620. I have chapter 6A. Can I straight away subtract chapter 6A here? No, I should check. Do I have any special rate income? If I have any special rate income against that, I can't subtract chapter 6A, right? So do I have any special rate income in this question? No, I'll check that once and then only I'll subtract chapter 6A. Chapter 6A, give reference to working note number 3. What's my total chapter 6A amount, guys? Total chapter 6A is one number only. I have 1 lakh rupees. So I'll subtract this 1 lakh rupees. So what is my assessee's total income now? Total income, guys, 31,33,620. This is the total income of my assessee. Okay, now tell me, do I have to round this off? It's already in multiples of 10. No need to round off. Now listen, this is only the total income calculation. What else are they asking? They're also asking me to calculate tax liability. So I'm done with the total income calculation. Now what's the next thing I'm going to be calculating? The tax liability, right, guys? We have to calculate the tax liability applicable. I'll again show you the chart which I had done earlier. This is the chart that we're going to follow. They are asking us which is the most beneficial method. So we will do as per normal rate. We will do as per AMT. We will find whichever is higher. This will be my normal tax. Then I'll see as per 115 BSE, I'll pick whichever is lower. Why whichever is lower? Because whichever is most beneficial. Okay, now listen, let us do the calculation. First of all, we have to calculate the normal rate tax. Normal rate tax, how do we calculate? How do we start? We always start by thinking what is the basic exemption limit applicable. Tell me, does the question make you think that my assessee is a senior citizen? No, where it is a senior citizen, guys. So therefore, what will the basic exemption limit be? The basic exemption limit is going to be 2,50,000. Do I have any special rate income and all? Nothing. So straight away, normal tax I can calculate. It's going to be very, very simple. What is the basic tax of my assessee? Tell me, basic tax. Up to 10 lakh, you anyways have to pay how much tax? Up to 10 lakh, you anyways have to pay 1,12,500. Right, guys, 1,12,500 plus 30% of whatever income you have earned in excess of 10 lakh. So how much does this work out to? This will work out to 7 lakh. Just a moment. 31, 33, 620 minus 10 lakh into 30% plus 1,12,500. This is going to be 7,52,586. Now tell me, will I have any 87A rebate? No, because total income is more than 5 lakhs. Will I have surcharge? No, because total income is within 50 lakhs. So straight away I have to add cess, guys. Cess at 4%. That's going to be how much? That's going to be 7,82,689, right? And no TDS receivable over here. So therefore, I will round this off to how much? I will round this off to 7,82,690 multiples of 10. So this is my tax as per the normal calculation. So if I come back to this chart, my normal rate tax is 7,82,690. This is my normal rate tax. Now I'll have to do AMT. I'll have to think about AMT. Tell me, will AMT even apply here? Is AMT even applicable here? See, we have conditions. My assessee is an individual over here. Will it apply to every individual? We have some conditions. It will apply to there are totally 2 conditions, right? Number 1, individuals, adjusted total income should be how much? Adjusted total income should be at least 20 lakh. Please correct the mistake here. Please correct the mistake here. Adjusted total income should be more than 20 lakh, not at least. It should be more than 20 lakh. Condition number 1. And what is condition number 2, guys? Condition number 2, either the assessee should have 10AA, or the assessee should have chapter 6A, part C, or the assessee should be having 35AD. At least one the assessee should have. Now tell me, does my assessee have 10AA over here? No. Does he have chapter 6A, part C? No. Does he have 35AD? Yes. Any one he has. Condition 2 is fulfilled. Now I have to check condition 1. Only if condition 1 is fulfilled, I will do AMT. Guys, are you noticing in the examination for many of us, AMT will not even strike our minds. But now, you should remember this chart. Whenever you do tax liability calculation, you should always follow this chart. If they don't ask you about 115 BAC, you will stop here. Right? If they ask you whichever is most beneficial, you will do the whole thing. Will you remember this? In this place, in this tax liability calculation, you will not make a mistake, right? You should always think about AMT. Because are you noticing how cunning nowhere in the examination have they even written about AMT. But AMT is actually applicable here. So therefore, please be careful. Whenever you come to tax, you always have to think about AMT. Okay, guys. Now listen, I need to calculate the adjusted total income number. Tell me, how will I calculate the adjusted total income number? What is adjusted total income? It is nothing but my normal total income. And then I'll add back what? I'll add back same 3 things. I'll add back 10AA deduction. I'll add back chapter 6A part C deductions. By the way, in your syllabus, what are the chapter 6A part C in your syllabus? In your syllabus, there are only 3 chapter 6A part C. What are the 3 chapter 6A part C? You have 80 JJAA. You have 80 QQB. And finally, you have 80 RRB. In your syllabus, you have only these 3 chapter 6A part C. Okay. And what else will I add back? I'll also add back 35AD deduction. And if I'm adding back 35AD deduction, relating to that 35AD asset, what will I subtract? Relating to the 35AD asset, I will subtract depreciation. This is how we calculate, right? Now see, in this question, what is the assessee's total income? His total income is 31, 33, 620. Do I have 10AA? No. Do I have chapter 6A part C? No. Do I have 35AD deduction? Yes. Remember, building we had deducted. How much building we had deducted? 20 lakh rupees building we had deducted. So we'll add that back. But on that building, what will we claim? We'll claim depreciation. Depreciation at what rate? Depreciation at 10%. And if you notice, the depreciation was put to use, the building was put to use when? 15th July 2021, which is definitely going to be at least how many days? Definitely put to use for at least 180 days. So I'll anyways get full year's depreciation. So 20 lakhs into 10%, that's going to be how much? 2 lakhs depreciation I will subtract. So can you tell me what's the net number? What is this assessee's adjusted total income? Adjusted total income, guys, it's going to be 49,33,620. Which are you noticing it is more than 20 lakhs? Yes. So even this condition is fulfilled. Condition 1, condition 2, both fulfilled, which means I can conclude that AMT is applicable. Everybody agrees AMT is applicable. Now tell me, how will I compute AMT? At what rate will I compute AMT? Tell me. AMT will be 49,33,620 into what rate? Into 18.5%. That is going to be 9,12,720. Straight away, we'll add cess. We'll add cess at 4%, which after cess, it's going to be 9,49,229, which we will round off to how much? Which we will round off to 9,49,230. Okay, now tell me, my basic tax is 7 lakh, my normal tax is 7,82,690. My AMT is 9,49,230. Which of the two you're supposed to pay? You're supposed to pay whichever is higher, right? Whichever is higher, which is 9,49,230. So normal rate or AMT 9,49,230, whichever is higher, which is 9,49,230. But of course, if you're going to pay AMT, then you will take this difference as AMT credit, and AMT credit has life of how many years? AMT credit has life of, come on, tell me. AMT credit has life of 15 years, right? So because I'm going to pay AMT, I will of course take AMT credit. Anyways, coming back to the question now. So this was my normal tax. They're asking us which is more beneficial. So I'll also have to think about 115 BSE. But for 115 BSE, I'll have to recalculate my income. Right? So if I apply 115 BSE, I have to recalculate my income. So what is the total income of the assessee as per the normal route? What is the total income of the assessee? Total income of the assessee is 31,33,620. Now I will go through working note after working note, and I will see what are the benefits which I have to reverse. Tell me, in PGBP, what are the benefits I have to reverse? Only one benefit I have to reverse in PGBP over here, which is 35AD. You can't enjoy 35AD in 115 BSE, guys. So I'll add back 35AD. I'll reverse 35AD of 20 lakhs. But if I'm going to reverse 35AD, what will I enjoy then? In its place, I will enjoy depreciation, at least depreciation building. Depreciation building is going to be 10%. So at least depreciation you let me enjoy in that case. Then tell me my next, so in depreciation, no other major benefit I have availed, which I have to reverse. Otherwise, in depreciation, what are the benefits that we reverse generally? Section 35, contribution to outsiders, we reverse. Additional depreciation, we reverse, right? So all that we anyways don't have. Then IFOS, we don't have anything at all. In IFOS, what do we reverse generally? That family pension point, that family pension deduction, that we reverse. But anyways, we don't have that. Then we have chapter 6A. Can you enjoy chapter 6A in 115 BSE? In 115 BSE, chapter 6A, only 80 CCD 2 and 80 JJAA. Only these two sections you can apply in, only these two sections you can enjoy in 115 BSE. Which two sections? 80 JJAA and 80 CCD 2. Only these two sections you can enjoy, right? We don't have either of these two sections. So anyways, talking about chapter 6A, 1 lakh I will reverse. This 1 lakh we will reverse. 1 lakh, what is this 1 lakh? This is your chapter 6A number. I'll add this back. So can you please tell me what is the total income of this assessee under section 115 BSE? Just a second. This is going to be 31,33,620 plus 20 lakh minus 2 lakh plus 1 lakh. This is going to be 5,33,620. Already in multiples of 10, so no question of rounding off. Now on this, I have to calculate tax. It's more than how much? More than 15 lakhs. On income up to 15 lakhs under 115 BSE, you anyways have to pay how much tax? You anyways have to pay 1,87,500 up to 15 lakhs, guys. So 1,87,500 plus 30% of whatever income you have earned in excess of 15 lakhs. Now tell me, how much is this number? This is going to be how much? This is going to be 12,47,586. This is only basic tax. Will I have 87A rebate? No. This number is more than 5 lakhs. Will I have surcharge? Yes, I will have surcharge. Why will I have surcharge? Because my income is more than 50 lakhs, right? Even in 115 BSE, do you have surcharge and all? Yes, you have under 115 BSE also. So you will have surcharge at what rate? More than 50 lakh up to 1 crore, you will have at the rate of 10%. That's going to be 124,759. Right? Now, after surcharge, what next? What do you think about next after surcharge always? You think about marginal relief, right? Now, let us do marginal relief calculation also. It will be a good revision for us. Now, marginal relief, what will you assume? You will assume your total income is how much? You will assume that your total income is by 10% surcharge, by 10%, because it is more than 50 lakh within 1 crore. So you will assume your total income is 50 lakhs. For 50 lakhs total income, what will be the tax? Tell me. what will be your basic tax? Guys, under 115 BSE, what will be your basic tax? Up to 15 lakh, you anyways have to pay 1,87,500 plus 30% of your income in excess of 15 lakhs. How much is this going to be? This is going to be 12,37,500. Will you have 87A rebate? No. Will you have surcharge? No, because it's exactly 50 lakhs. So your tax is going to be 12,37,500. Now, total income number, tax number. What's your actual total income? Your actual total income number is 50,33,620. For 50,33,620, how much tax are you asking me to pay? You're asking me to pay 124,7586 basic tax plus 124,759 surcharge. You're asking me to pay 13,72,345 tax. But if I assume my total income is 50 lakhs, then how much tax are you asking me to pay? 12,37,500 you're asking me to pay. So how much extra income I have earned? 33,620. To earn this extra income, how much extra tax have you asked me to pay? You have asked me to pay extra tax of 134,845. Now tell me, is this even fair? For just 33,620 income, you're asking me to pay so much extra tax. My total income difference is lesser. My tax difference is higher. So therefore, will I have marginal relief? Will I have marginal relief? My income is less. My tax is more. My tax is more than my income. So yes, I will have marginal relief. The difference of 134,845 minus 33,620. What is this difference? This difference is going to be 1,01,225. This 1,01,225. This becomes our marginal relief number. 1,01,225. So what's your final number? Also add cess and tell me the total number. 124,7586 plus 124,759 minus 101,225 plus 4% cess. This is going to be 13,21,965, which we will have to round off, guys. We'll round off to 13,21,970. Okay, now we will take this number to our chart again. 13,21,970. Out of these two numbers, which number will we pick? We will pick whichever is a lesser number, and which is a lesser number? 9,49,230. So what will we tell the assessee? Assessee, you follow the normal route. If you follow the normal route, 9,49,230 is lesser than 115 BSE. So you pay this much. First question done. First full-fledged total income question. Through this first question, our whole tax liability chart is sorted. Through this first question, your biggest learning is this tax liability. Is this clear? Yes. Just a moment. Yeah. Are we done, guys? Are we clear with this? Do you have perfect clarity? Right? So I think you see what are our learnings through this question. Apart from tax liability, I would suggest one more very interesting adjustment through this question was also our discussion regarding that breach of contract, that penalty on breach of contract. Where is that adjustment? This one. This was also a very interesting adjustment for some of you. And then 80GGB, 80GGC, even that has gotten revised for us through this question. And a little bit of 3580 also got revised for us. All right, so that is it about the first question. Come on, guys, let us go to the second question, right? The first question was a lot of learning, and the second question is going to be even better. Come on, let's begin. Do not forget the tax table, okay? Now, question number 1 that we just worked out, this question was regarding total income, but focusing on PGBP. Now, this question number 2 that we're going to be working out, question number, what's happening? This question number 2 that we're going to be working out, this is a salaries based total income question. Okay, total income question can either be salary based or it can be PGBP based. So what we worked out just now was a PGBP based total income question. Now what we're going to work out is a salary based total income question. Okay, are you ready? Shall we begin? Let us have a look at the question. What does the question say? The question says, Mr. Satish, aged 47 years. What are you able to conclude at this stage itself? You're able to conclude that he is not a senior citizen. He is serving in a public limited company as General Manager Finance. His total emoluments for the year ended 31st March 2019, which means which year are we talking about, guys? We're talking about which year? We're talking about previous year, 1920. Guys, listen, I know the first question might have been a little overwhelming for some of you. Some of the adjustments over there you might not have been able to follow. You might have gotten stuck, or you might have, realized that, oh, I did not know this. The tax calculation part might have overwhelmed you, but does that mean that you're going to give up and get disappointed? No, I've told you in the very beginning itself, I have purposely brought in challenging questions because we need to learn something through these 6 hours. We're not just going to gain confidence and go that, okay, we know everything. That's not going to serve the purpose. Are we clear? I'm telling you this again and again. The reason being, we are in the last 20 days before the examination, right? And at this stage, our mental state is very, very delicate. Even the slightest of the triggers will make us get anxious. Do you agree? Right? So, but then there's no point in going into that whole zone, because if you go into that whole zone, coming back is going to be a huge task. So yes, there are going to be challenging questions, but that's the whole point. I mean, if you were to spend these 6 hours with me and learn nothing new out of these 6 hours, would it even make a difference? No. So are you okay that I'm going to be doing challenging questions? Is that okay for you? Because at the end of the 6 hours, if you think you've learned something new, that is exactly what's going to make you happy, right? That's what's going to make it a little better for you, right? That's how you're going to improve things. At least see, listen. I'll tell you how your thinking should be, okay? I'll tell you this once. You make sure that you follow this thinking till I finish, all right? Your thinking should be this way. At least I finished this question before the exam could happen. So if this adjustment comes in the examination, now I know how I'm going to handle. Are you understanding? This is what your thinking will be. I'm glad that I was able to at least see this question before the examination. I'm lucky I was able to see this adjustment before the examination. Now, if this adjustment comes in the examination, oh wow, I'm so prepared. Are you understanding? This is how the thinking should be. And the thinking should not be, oh my God, if this is the kind of questions that are going to come in the examination, how am I going to handle? That is not how your thinking should be. Okay, deal? Pakka promise? Yes, till the very end, your thinking you have to take care. I will take care of the questions, you take care of your thinking. Okay, come to question number 2, guys. Let us look at the question. Mr. Satish, aged 47 years. He's not a senior citizen, and we're talking about previous year, 1920. They have given us a lot of information. What are they asking us? Total income and tax liability. Tell me, do I have to think about 115 BAC here? Do I have to think about 115 BAC? No, why not? Do they ask us which is the most beneficial and all? Are they asking us to follow 115 BAC? So no 115 BAC. Now tell me, do I have to think about AMT here? Yes, because in normal tax, AMT also plays a role. So AMT I'll have to think, but 115 BAC I will not think. Okay, so come on, let's begin now. Answer to question number 2. Total income, again we are calculating. Now looking at this question, very obviously we have the salaries head. So I'll write down in my main answer salaries. I'll give reference to working note number 1, and then I'll open working note number 1 with the heading salaries. Okay, now look at the question. We have basic salary of 5,40,000, taxable. Of course, taxable. So basic salary 5,40,000. Then what else? We have HRA. Thankfully, they've already computed and given us a HRA. So we can take the HRA as it is, 1,80,000. They have already computed the taxable number. Transport allowance. Guys, transport allowance, how much is exempt? Tell me. Transport allowance, how much is exempt? Which number? Any number exempt over here? There will be nothing exempt over here. Nothing exempt over here. When do we give exemption? We give exemption only if the employee is blind, deaf, dumb, only then we, or orthopedically handicapped, only then we give exemption. Here we will not give exemption. Now listen. So coming back to the discussion, transport allowance 22,000 taxable. Now after this, Apart from the above, his employer has sold the following assets to him on 1st January 2019. Sold, guys, employer has sold. So transfer of movable asset. Transfer of movable asset, we have laptop and car. Two assets the employer has sold to the employee. Transfer. You remember that adjustment? Let us do a working note, okay? Working note number 2 for transfer of movable asset. Two assets are being transferred here. One is laptop and the other is car. How do we do it? We follow a standard procedure. We will start with actual cost to the employer. Long back when the employer had purchased the laptop, for how much did the employer purchase it for? Acquired in September 2017 for 1,20,000. For how much did the employer acquire the car? Acquired the car for 8,50,000. Now from this, what do we subtract? We subtract normal wear and tear. Please do not use the word depreciation, because depreciation is a word which we use only in PGBP. Here we will use the word normal wear and tear. Now tell me, laptop normal wear and tear will be at what rate? Laptop normal wear and tear will be at what rate? This is going to be at 50%. 50% what method? 50% WDV method. For car, it's going to be at what rate? Motor car, it's going to be 20%. 20% what rate? WDV. But then we calculate wear and tear only for completed years, guys. Only for completed years, which means no fraction. Now tell me, it was acquired in September 2017, sold in Jan 2019. How many completed years? September 2017 to September 2018, only one completed year. Right? So only for 1 year, you will do the calculation here. And what about laptop? What about motor car? Motor car is how many completed years? Purchased in April 2017, sold in Jan 2019. So April 2016 to 17, 1 year. 17 to 18, 2 years. 18 to 19 is not getting completed. So only 2 completed years. So for laptop, we will have to do the calculation only for 1 year. So for 1 year, it's going to be 1,20,000 into 50%. That's going to be 60,000 rupees. Okay. So for laptop, we can close here itself. The final number is going to be 60,000 rupees less. What is the amount which we have recovered from employee? How much money have we received from the employee against a laptop? We have received 20,000 rupees against a laptop. So what's the net number? The net number is 40,000 rupees. This is the taxable value for the laptop. What about car? Car, how are you going to calculate 20% WDV? We concluded 2 completed years, right? So for year 1, it's going to be 8,50,000 into 20%. That's going to be how much? That's going to be 1,70,000 rupees, right? And for year, so which means what's your WDV at this stage? The WDV at this stage would be 6,80,000 rupees. And for year 2, it's going to be how much? 6,80,000 into 20% WDV basis, guys. So therefore 1,36,000. So what's the value as of now? The value as of now is 5,44,000. How much have we recovered from the employee? We have recovered 3,20,000 from the employee. So what is the final taxable value of the car? 2,24,000. This becomes a taxable value of the car. So what's the total taxable value of the movable asset? Total taxable value of the movable asset is going to be 2,64,000. So coming back to my answer, movable assets were transferred from the employer to the employee. Working note number 2, we've done the calculation, 2,64,000. Tell me, does it make a difference to you what is the cubic capacity of the car? No, the cubic capacity of the car makes a difference to me only if it is motor car perquisite. Motor car perquisite means just given to the employee for use. Only there I will bother about the capacity. Here it was transfer of motor car. It is not motor car perquisite. It is transfer of movable asset. So what is the cubic capacity? That's going to be irrelevant for me. Tell me, are we crystal clear till here? Yes. Did we understand the movable asset calculation? Laptop, I gave 50% WDV. For car, I gave 20% WDV. Laptop, only 1 completed year. For car, it was 2 completed years. So actual cost to the employer minus normal wear and tear minus amount recovered from the employee. The balance becomes my taxable number. Okay. Now let me take you to the next adjustment. Look at the next adjustment over here. This is a very interesting adjustment. This is where major learning is going to happen. He also owns a residential house, let out at a monthly rent of 15,000. Immediately we know which head of income is involved here. IFHP is involved. IFHP, let us say working note number 3. So after working note number 2, I'll open a working note number 3 for IFHB. Now let me read the entire adjustment. He owns a residential house which was let out. Guys, it was a let out house. Monthly rent 15,000. Fair rental value of the property for the let out period is 1,50,000. House was self-occupied by him from 1st Jan 2019 to 31st March 2019. Which means what, guys? We are doing the calculation for 1920 only. January onwards. We're doing the calculation for previous year 1819, not 1920. For 1819, we're doing the calculation. 1819, if you see, Jan 19 onwards, it was self-occupied. So part of the year let out, part of the year self-occupied. How do you treat it as if it is? As if it is let out for the whole year, right, guys? Part of the year let out, part of the year self-occupied, you will treat as if it is let out for the whole year. Now, what happened? He has taken a loan from a bank of 20 lakhs for construction of the property. He has repaid 1,05,000, including interest of 40,000 during the year. This entire adjustment is relating to IFHB. Guys, part of the year self-occupied, part of the year let out. I'm going to treat as if it is let out for the whole year. I'm going to treat as if it is let out for the whole year. See what I have written over here. I'm going to treat as if it is let out for the whole year. Now tell me, let out property, how do you do the computation of IFHB? For let out property, how do you start? You always start with GAV, right? GAV, you have steps. Step number 1, municipal value, fair rent and all you have. They have given us the fair rent number. So step 1, tell me what's the municipal value? Have they given me the municipal value? No. Can I write 0? No, I should write not applicable. Municipal value of fair rent. What's a fair rent? 1,50,000. Can I take 1,50,000 as it is or any adjustment to be made? I want everybody to answer. Can I take this 1,50,000 as it is or do I need to make any adjustment? Tell me. Do I need to make any adjustment? Guys, I need to make a major adjustment here because see, read it fully. Fair rental value of the property for the let out period they have given to us. But I am going to treat as if it is let out for the whole year. I am going to treat as if it is let out for the whole year, but they have given me fair rent only for the let out period. What is a let out period? In this question, April to December is let out period and Jan to March is self-occupied, guys. So they have given me fair rent only for April to December. This is your biggest learning through this question, that read the question properly. You know the concept very well. You know that you're supposed to treat as if it is let out for the whole year. But here they have given us fair rent only for the let out period. So are you understanding? This 1,50,000 is only for 9 months. But what do I need? I need for 12 months. I need for the whole year. I'm going to treat as if it is let out for the whole year. So 1,50,000 into 12 by 9. Because 1,50,000 is for 9 months. What is for 12 months? Simple cross multiplication, guys. This is going to be 2 lakh rupees. Out of these two numbers, whichever is higher, which is higher? 2 lakh rupees. Step 2, which is also called reasonable expected rent, will be nothing but the step 1 number or standard rent number, whichever is lower. Standard rent they have not given to us, not applicable, 2 lakh. Then comes step 3. Step 3 is the actual rent minus unrealized rent. Now see, everything else you will treat as if let out for the whole year. Actual rent alone you will take for which period? Actual rent alone you will take only for the actually let out period. Does everybody agree to that? Yes, guys, everything else you will treat as if let out for the whole year. Only actual rent you will take only for the actually let out period. And what is my actually let out period? 9 months, right? So actual rent 15,000 into 9, only for 9 months I will take. Guys, did you all register this in your mind? You're not going to revise this again. You're going to straight away do this the day of the examination. Will you be able to remember? Everything else I will treat as if let out for the whole year. Only actual rent I will take only for the actually let out period. One last time. Everything else I will treat as if let out for the whole year. Only actual rent I will take only for the actually let out period. So how much will this be? This is going to be 1,35,000. No unrealized rent for me. So 1,35,000. Now comes step 4. Step 4 is nothing but a step 2 number or a step 3 number, whichever is higher. 2 lakh number or 1,35,000 number, whichever is higher. Which is higher? The 2 lakh number. Then after this, step 5, vacancy loss. The house is not vacant during the year. So step 6, GAV number, which is nothing but step 4 minus step 5, which is going to be 2 lakhs. Perfectly clear. Yes, so I have the GAV number with me. I have the GAV number. How much is my GAV number? 2 lakh. From this GAV number, what are we supposed to subtract? Tell me. We're supposed to subtract municipal taxes paid. As of now, do we know what is a municipal taxes paid as of now in this adjustment? We don't know. We might have it later in the question. One quick glance at the question. Anywhere is a municipal tax paid number written. One quick glance at the question. Nowhere municipal tax paid number is given. So this 2 lakh as it is becomes our NAV. Now tell me, what do we subtract deductions under which section? Deductions under section 24. Two deductions we will have. Number one, we will have standard deduction at what rate? At the rate of 30%. 2 lakh into 30%, that's going to be 60,000. One more thing we subtract. We subtract interest on borrowed capital. As soon as you write interest on borrowed capital, two things should come to your mind. What are the two things that should come to your mind? Pre-construction interest and current year interest. But in this question, do we have any pre-construction interest? Have they given us date of borrowing the loan, date of completion of construction? All that they have not given to me. So no pre-construction interest. But guys, I have current year interest. I have see, listen, the question says he took a loan of 20 lakhs. He repaid 1,05,000, including interest 40,000. So interest 40,000. What is the balance? 65,000. Balance 65,000 will be principal. So what is the interest? Interest is 40,000. Current year interest is 40,000. Tell me, do I have to think about any limit? 2 lakh limit, 30,000 limit. Do I have to think about all that? I don't have to think about all that. Why? Why? Because it is a debtor property. It is not a self-occupied property. So straight away, I'll subtract this. What is my number going to be here? 1 lakh rupees. 1 lakh rupees is my IFHP. Okay. And also, guys, is this adjustment over or is there anything left to be done by me? I still have one thing left. What is it? Don't you think I'll have to do chapter 6A? The 65,000 will go to ATC, no, principal repayment. See, principal repayment will go to ATC only if some conditions are fulfilled. You should have borrowed the loan for purchase or construction of the property. Did you borrow the loan for purchase or construction of the property? Yes. The lender is a bank. Is that okay? Yes. Lender has to be a bank or government or employer and all. Can the lender be your friend? Can the lender be your relative? No. And one more condition. See, there are totally 3 conditions. Condition number 1, the loan should be for purchase or construction of the property. Condition number 2, you'll have to see who the lender is. And condition number 3, it has to be a residential house property. Only if it is a residential house property, only then principal repayment you can give me ATC. Tell me, is it a residential property? Yes, question clearly tells me it's a residential property. So all my conditions are fulfilled. Therefore, go as SE, enjoy the 65,000 as ATC deduction. So I'll open another working note. Okay, I'll open, let us say, working note number 4. I'll open working note number 4 for chapter 6A. All right, now chapter 6A, I have ATC. ATC will go to which section? Tell me. ATC will go to ATCCE. What does ATCCE say? ATCCE says ATC plus ATCCC plus ATCCD subsection 1 put together should not exceed 1,50,000. So I have housing loan principal repayment of 60 how much? 65,000. Housing loan principal repayment, I have 65,000. All my 3 conditions were fulfilled. Condition number 1, it should be for purchase or construction. Condition number 2, it should be residential house property. Condition number 3, I'll have to see who the lender is. Perfect. Till here you've understood? Yes. Now listen. Now comes a very important adjustment. Third adjustment from capital gains, guys. I've purposely brought in this question especially to give you some practice with this adjustment. So listen to me very carefully. Okay, Mr. Satish sold equity shares of different Indian companies on 14th March 2019. A Limited, B Limited, 2 companies shares he has sold. Selling price they have given us, purchase price they have given us, date of acquisition they have given us, number of shares they have given us. Cost inflation index also is there. Sale proceeds were subject to brokerage of 0.1%. What is this brokerage of 0.1%? This will be nothing but expenses on transfer. And then he has also paid STT on the gross consideration. Till here, this adjustment is. Are you ready? Yes, you're going to have a major learning through this adjustment. Come on, you guys, sit up straight and listen as carefully as you can. Capital gains, I'll give reference to working note number 5. Did you notice I just quickly gave a reading to the capital gains adjustment? By giving this one reading, I know a little bit that what exactly has happened in the story. Whenever it comes to capital gains, the biggest problem with students face is they've read the adjustment. Now after this, what to write? Right, guys? So I will give you one standard procedure that you will follow in every question. After you read the question, no need to visualize the answer. No need to put everything in your place. No need to plan the answer. You will straight away start writing. You will start with what? What's the first step? You will start with capital asset. What is a capital asset over here? And then you will do the period of holding. Generally, this is how you do. But listen, in this question, multiple assets are sold. Shares of 2 companies are sold. Guys, both are equity shares only. So can I put them both under one category? Can I say one asset is sold equity shares? No, they are 2 different companies' shares acquired on 2 different dates, 2 different indexations and all will apply. Do not club. Whenever you have more than one asset sold, you will combine these 2 steps into one step. Otherwise, these 2 will become 2 separate steps. If you have more than one asset sold, you combine these 2 into the first step. Okay. What are the capital assets sold? 200 shares of A Limited. So first capital asset, 200 shares of A Limited. Give me more clarity. What kind of shares are they? What kind of shares? Equity shares. Give me some more clarity. What kind of equity shares are they? STT paid at acquisition, STT paid at transfer. Don't you think I can say that they are listed equity shares, guys? See, I have a question for you, okay? Think and answer. No hurry, think and answer. Why are you calling them as listed equity shares? Are you calling them as listed equity shares because you paid STT at the time of acquisition, or are you calling them listed equity shares because STT was paid at the time of transfer? Or because of both? Why are you calling it? Come on, I want everybody's answer. Why are you calling it listed equity shares? Because of STT. Is it because of STT at the time of purchase, or is it because of STT at the time of transfer, or is it because of both? Guys, no, it is not because of both. You are supposed to see at the time of transferring, what are you transferring? It is capital asset transferred. When I'm transferring, when I'm selling, am I paying STT? Yes. So what am I transferring? See, guys, capital gains, when does it trigger? It triggers only upon transfer, right? Only when you transfer the asset, it triggers. So when you're transferring the asset, you should be transferring a capital asset. Is this clear? So when I'm transferring, am I paying STT? Yes, I'm paying STT, which means these are listed shares. Whether I have paid STT at the time of acquisition, whether I have not paid STT at the time of acquisition, that is not relevant for me to decide whether it is listed or unlisted. Listed or unlisted, it only depends upon when I am selling, what am I selling? When I'm selling, I paid STT, which means when I'm selling, what am I selling? I'm selling listed equity shares. Must be a very good learning for many of you. Have you registered this in your mind? Yes, so when I'm paying STT, which means I am selling listed equity shares. When I purchased, what were they? It doesn't matter. What matters is when I'm selling, what am I selling? So they are listed equity shares. Okay, now tell me after this, what is the next point? What's the period of holding? When did we acquire these shares? We acquired these shares on 2nd February 2018. And when did we sell away these shares? We sold away these shares on 14th March 2019. Now tell me, what's the relevant period of holding? 12, 24 or 36 months? They are listed equity shares, guys. Relevant period of holding is 12 months. Is this period more than 12 months? Yes, it is definitely more than 12 months. Therefore, what kind of asset? Long-term capital asset. Now tell me, long-term capital asset, is it 112 or 112A? Is it 112 or 112A? See, if you want to apply 112A, there are some conditions. Condition number 1, they should be listed equity shares or listed units of business trust or listed units of equity oriented mutual fund. Yes, it is listed. Condition number 2, you must be paying either listed equity shares or listed units of business trust or listed units of equity oriented mutual fund. Condition number 2, you must be paying STT. At the time of transfer, you must be paying STT. But if it is listed equity shares, you must also be paying STT at the time of purchase. Even this condition is fulfilled. We've paid STT at both the times. Condition number 3, what is the date of transfer? When are you transferring? You should be transferring on or after 1st April 2018. Yes, we are transferring on 14th March 2019. So all my 3 conditions are fulfilled. Therefore, which section will apply? It is definitely going to be section 112A. Are you clear with this? It's going to be 112A. Then after this, what else are we selling? We're also selling 125 shares of B Limited. We are selling 125 shares of B Limited. They are also equity shares, but are they listed? When I transferred, did I pay STT? Yes, I paid STT, so they are listed. When I purchased, did you notice this? When I purchased, did I pay STT or not? Is it relevant for me to decide whether it is listed or not? It is not relevant for me. What matters to me is when I'm selling, did I pay STT? Yes, I paid STT, which means it becomes listed. Okay, is this clear? Now tell me, what's the period of holding? When did I acquire these shares? I acquired them on 16th April 2018. I sold all the shares on 14th March 2019. Listed equity shares, relevant period of holding is 12 months. It is within 12 months. Therefore, what kind of asset? Therefore, short-term capital asset. Now tell me, is it 111 a short-term capital asset or is it normal short-term capital asset? It is listed equity shares. We have paid STT at the time of transfer. Therefore, this is going to be 111 a short-term capital asset. Do you agree? This is going to be 111 a short-term capital asset. In 111 a also, do you have a condition that you must have paid STT at the time of purchase? Do you have that condition? No, STT at the time of purchase, that condition is there only in 112A. Right? This identification is important. Can you tell me why did I identify this right now? Don't you think accordingly I will compute? Had I not identified this as 112A, I would have ended up indexing the cost of acquisition and all. You're understanding? Had I not concluded what section it is over here, I might have messed up with the calculation. So that is why, guys, I insist whenever it comes to capital gains, follow this process. This is a foolproof process. You will just not make a mistake. The same sequence in each question. Whenever I do a capital gains question for you, in every capital gains question, same process I will follow. Capital asset transfer, period of holding. On that basis, long term or short term. On that basis, with section number. This is one thing which I will identify in the very beginning itself. Once I do this, I will get a guidance on how to do the rest of the computation. This is a foolproof method, tried and tested method. This method will never ditch you in the examination. Trust me when I say that. Okay, I've done the first and the second step, capital asset, period of holding. I'm done with my first 2 steps. What is my next step? After this, I will start off with the computation. Tell me, can I put both under one single column, both the assets? No, I will treat them as 2 different assets. So I have 200 shares of A Limited and I have 125 shares of B Limited. Okay, now how to start the computation? I'll start with full value consideration. For how much did I sell away the share? Sale value 150 per share. So 200 shares into 150 per share, 30,000 rupees. 125 shares, sale price 82 rupees per share. 82 rupees per share into 125 shares, 10,250. From this, we subtract expenses on transfer. Now tell me, how many expenses on transfer do we have? We have brokerage and we have STT. How many expenses on transfer do we have? 1 or 2? We have only one. Securities transaction tax, can we call it as an expense on transfer? No. In the whole of Income Tax Act, we can subtract STT only in one place, and that is in PGBP. And that too, when do you subtract in PGBP? Only if it is your assessee business to buy and sell shares, then STT becomes a business expense. You subtract it under STT. So in the whole Income Tax Act, only in one place you subtract STT, that is in PGBP, and that too only if it is your assessee's business to buy and sell shares, only then you subtract. Here it is capital gains. I will not subtract STT. Only brokerage I will consider 1.1%. 0.1% of what? 0.1% of my sale consideration. So 30,000 into 0.1%, this is going to be 30 rupees, and 10,250 into 0.1%, this is going to be 10 rupees. So what is my net consideration? This is going to be 29,970, and this is going to be 10,240. After this, what do we subtract? Tell me. Cost of acquisition. Can I please index the cost of acquisition? What do you think? Guys, 112A, can you index? 112A, even though it is long term, sorry, you can't index. 111A, short term, guys. Short term, you anyways can't index. So sorry, no indexation. Okay. So tell me about the 125 shares. That is easy. That let us finish off. If you look at the 125 shares, what is the cost of acquisition? 62 rupees per share. So 125 shares into 62 rupees per share. What is my cost of acquisition totally? 7,750. This was very simple. But coming to this part, coming to 200 shares, guys, listen. 112A, cost of acquisition, we have one drama calculation, right? We have to compare cost of acquisition, FMV, FVC, all that we have to compare. Do you know that? I'll give you a quick revision. How are you supposed to calculate cost of acquisition? You will see the actual cost of acquisition. You will compare this actual cost of acquisition with what? With FMV on 31st Jan 2018 and FPC. These two numbers, whichever is lesser, and these two numbers, whichever is higher. But tell me, just because 112A, will you always do this drama calculation? No. When do you do the drama calculation? Only if the date of acquisition is on or before which date? Come on, everybody tell me. Come on. When do you do this drama calculation? Only if the date of acquisition is on or before 31st Jan 2018. But did we acquire on or before 31st Jan 2018? No. We have acquired on 2nd February 2018. So will I apply this drama calculation? No drama. I'll take it straightforward as it is. 120 rupees per share for 200 shares. This is going to be 24,000, the biggest learning of this question. Otherwise, we are so used to doing this calculation in 112A. We should know that just because it is 112A, it is not obvious that this calculation will always apply. This calculation applies only if the date of acquisition is on or before 31st Jan 2018. Tell me, is this clear? Have you registered this in your mind? Yes. Can we complete this now? Do we have any cost of improvement? Shares, guys, what cost of improvement they will have? So what is my LTCG under section 112A? My LTCG is going to be 5,970. And what is my STCG under section 111A? This is going to be 10,240 minus 7750, 2490. But LTCG 5,970, it is within 1 lakh, hence it is exempt. So I don't even have to take it to the total income calculation, correct? 5,970 guys, within 1 lakh. I don't even have to take it to the total income calculation. Is this right? Of course not. Terrible. When will I see? When do I think about the 1 lakh number? When do I think about the 1 lakh number? Only when I'm doing the tax calculation. Only when you do the tax calculation, only then you even think about that 1 lakh number. In the total income number, as it is, this will go. Only when you're calculating tax, only that time you will think about the 1 lakh number. Is this clear? Can I go to the next adjustment? Yes. Perfect. Listen now. This was capital gains, and by the way, story doesn't end. One last thing you're supposed to do always. You're always supposed to check which year will this be taxed in. It's going to be taxed upon transfer. The reason why I ask you to check about the year of transfer, the year of taxation is, right, there are some exceptional cases where you tax it in different years. Like for example, when you convert capital asset into stock in trade, you don't tax it in the year of transfer. You tax it only when you sell the stock in trade. Similarly, in insurance compensation cases, you don't tax it in the year of transfer. You tax it only in the year in which you receive the compensation. Similarly, even in liquidation cases, you don't tax it in the year of transfer. You tax it only in the year of distribution of assets. So, and also one last thing, compulsory acquisition cases, you don't tax them in the year of transfer. You tax them only when you receive the compensation. So that is why you have some cases where the year of taxation is different. So therefore, to include that also in the format, I generally tell students that at the end, you should always check that which year will you tax this income in. Now here any exceptional case applicable, here exceptional case not applicable. So whichever year we did the transfer, which is 1819, in 1819 we will do this taxation. 1819 means assessment year, 1920. This is the year for which we're doing the calculation. So in this year we will do the calculation. Yes, Kartika, don't worry. You will be getting the YouTube recording. Don't worry about that. Okay, you can attend this point onwards if you want to, but all right. Now listen, guys. So this was our discussion regarding the capital gains computation. Okay, can I take you forward? Capital gains, are you comfortable? The whole of 112 we got revised for you indirectly through this question. Your biggest learning over here was what? Your biggest learning over here was, just because 112 don't straight away do the drama calculation. Just because 112 don't straight away do that calculation. Check the date of acquisition. Only if it is on or before 31st Jan 18, you will do all that calculation. Otherwise, here it was not before 31st Jan 18, it was after 31st Jan 18. So therefore, we took the normal cost of acquisition only. Okay, now coming back, he received income tax refund of 5,750, including interest 750. Tell me where will this interest go? Interest on income tax refund. We've done this in the last question also. This will come to the IFOS head. So I'll create another head IFOS, working note number 6, let us say. After working note number 5, I'll open working note number 6, IFOS. Under this, I have interest. I have interest on income tax refund. How much interest do I have? Only 750 rupees we have. Okay, then Mr. Satish made payment of 80,000 rupees. Mr. Satish made payment of 80,000 rupees by check number 245315 towards medical insurance as lump sum premium for himself and his wife for 4 years. Tell me, medical insurance premium, which section will you think about? Immediately which section comes to your mind? Section 80D comes to your mind, right, guys? So I'll leave some gap over here. I'll come to section 80D. Now tell me, he is paying for himself and his wife. So which category? Family category or parents category? This is going to go under the family category. Now this is lump sum premium for 4 years. So 4 years would be 80,000 divided by 4. Per year, how much deduction will you get? Per year, 20,000 deduction you will get. Now, here they said 4 years, so I divided by 4 years. What if they had said 80,000 rupees, but payment was made on 1st of June 2018? Then what would you do? In that case, if they had given you the date, then you would divide it not by 4, you would divide it by what? You would divide it by 5. You know that, right? You know that, right? If they have given you the date, you will divide it by plus 1. So if they've given you the date, even if they say 4 years, you will divide it by 5. Okay. What if they had said 1st April 2018? Then also would you divide by 5? No. 1st April 2000 date if they give you, then it would be divided by 4 only. So when they say 4 years, you divide it by 4. If they give you a date, you add a 1. You know the logic behind this? Do I have to explain it to you? Or do you know the logic behind this? Come on, everybody tell me. Do you know why all this drama? No? Okay, fine. Let us spend 2 minutes. Let us spend 2 minutes. Let us try to understand. Otherwise, mugging up this will become difficult. See, listen. Take an example, okay? Listen. Date of policy. Or let us say date of payment. When did we make the payment? 1st June 2018, we made the payment. It is for 4 years, they are saying. And we paid lump sum. We have paid 80,000. This is my first scenario. Scenario number 1. Okay, 1st June 2018, how much have we paid? 80,000 lump sum we have paid. 4 years means what? 1st June 2018 till when? Till 31st May 2022. This is going to be the period of the policy. Now, if this is a period, in this period, tell me, what are all the years involved in this period? What are all the years involved in this period? The years involved. Previous year 1819 is involved. Previous year 1920 is involved. Previous year 2021 is involved. Previous year 2122 is involved. And previous year 2223 is involved. Are you seeing? Totally how many years are involved? 5 years are involved. So therefore 80,000 divided by 5. For each of these 5 years, you will get how much deduction? Each of these 5 years, you will get deduction. 80,000 divided by 5, each of these 5 years, you will get 16,000 deduction. Understood? Why 5 years? Because this period is touching upon 5 years. Come on, tell me. All those of you who did not know about this, did you understand? This period is going to be touching upon 5 years, right? Because you took the policy in between the year. So 5 years it is touching upon. That is why you will divide it by 5. First scenario. But listen, what if the date on which you've made the payment was 1st April 2018? Then 4 years would be what? 4 years would be what in that case? 1st April 2018 to 31st March 2022. 19, 20, 21, 22, it would be for 4 years. Now, if this is the case, tell me, what would be the years that this policy is touching upon? This policy is touching upon 18, 19, 19, 20, 20, 21, 21, 22, that's all. So therefore, you would split this 80,000 only across how many years? Only across 4 years. That would be 20,000 per year. Now you understood. But however, listen. If they say, if the question says, if the question does not give you a date, it just says 4 years, just says 4 years, you will not know the period. You will not be able to do all this calculation. If it just says 4 years, you will simply do 80,000 divided by 4. Is this also understood? You will simply do 80,000 divided by 4. Crystal clear? One last point, one last situation. Listen, okay, one last thing. Let us say situation 4. What if it is, 1 minute. What if it is 31st March 2018, 4 years, then what would the period be? Don't tell me the period. Straight away tell me you will divide 80,000 by what? Straight away tell me. 31st March 18, 4 years, 80,000 lump sum premium you've paid. You will divide it by 4 or 5. You will divide it by 5. You will divide it by 5. See, I'll tell you why. 31st March 2018 plus 4 years will be what? Till 30th March 2022. Now see, how many years is it touching upon? It is touching upon 17, 18 also, no? Total 5 years, no? Till 21, 22. So 80,000 divided by 5. That is why, but tell me, in the examination, will you have the time to do all this thinking? What if it is 10 years? What if it is 8 years? Will you sit and write all the years like that? You will not have the time. That is why one shortcut generally I ask students to remember. What I tell them is, if the question says 4 years, then what will you do? You will divide it by 4. Point number 1. If the question gives you a date, which is 1st April, if the question gives you a date which is 1st April and the policy is 4 years, if it is 1st April, then 4 years means you divide it by 4 years. If the question gives you any other date, including 31st March, then 4 years means it would be what? It would be divided by 5. Now you will not make a mistake in this. This is like a summary of this whole discussion. Tell me. Yes. Just a moment, guys. My mom is calling repetitively. She's getting worried, I think. Just a moment. Yeah. So perfect. I'm hoping this is crystal clear. Yes, use this technique to handle MCQs, okay? Because MCQs and all, you will not be able to spend the time to, do all that thinking. But I have also explained it to you so that just in case you forget this rule, you should also be able to derive this rule during the examination, okay? Fine. Now listen. So this is also done. Did we do the number? Did we put down the number? Let me check. No, we did not put down the number. So medical insurance premium 80,000. It straight away says 4 years. It did not give me a date. So straight away I'll calculate 80,000 divided by 4, guys, which is going to be how much? Which is going to be 20,000 rupees. Okay. And listen. This premium was paid by check. Is check okay for us? Is check okay? Yes, it can be in any non-cash mode. Tell me, does ATD talk about the 2000 number? ATD doesn't talk about the 2000 number. Irrespective of the amount, you're supposed to pay by non-cash mode. He also made cash payment of 8,000. He also made cash payment of 8,000 towards preventive health checkup for himself and his wife. What about this? Even this will go under ATD. Even this will go under ATD. But is cash okay? Yes, preventive health checkup can be paid in cash also. But maximum, how much we can take for preventive health checkup? Maximum 5,000 only we can take. So total ATD, how much deduction I'm giving? I'm giving 25,000 deduction. But what will the maximum limit be? The maximum limit for the family category is going to be 25,000 only because the assessee is not a senior citizen. So the limit is 25,000 only and it is within 25,000 limit. Story over. Last, Mr. Satish deposited 1,30,000 in PPF. Guys, PPF will go to which section? PPF will come to ATC again. So under ATCCE, I'll talk about PPF over here. PPF, the amount is how much? 1,30,000. 1,30,000. Okay. Now look at the rest of the question. He deposited 1,30,000 in PPF and 80,000 in 5-year term deposit in the name of his minor son. 5 years term deposit goes to which section? 5 years term deposit, 5 years time deposit, 5 years tax saver deposit, 5 years fixed deposit, all will go to ATC. But all of this has to be paid for whom? It has to be paid for assessee himself. This 5-year FD is paid for son. Therefore, you will not get ATC. Understanding? FD, you will not get ATC. Listen, if you look at ATC, in the whole of ATC, life insurance premium and PPF, you can pay for whom? For self, spouse, children. Children may be dependent, independent, married, unmarried, own, adopted, stepchildren, doesn't even matter. All children covered. If it is Sukanya Samriddhi scheme, this payment has to be in the name of a girl child's account. If it is payment of tuition fees has to be in the name of any 2 children of the assessee. 2 children only maximum. All other payments under ATC has to be for whom? All other payments has to be in assessee's own name. This is FD. Had the FD been made in assessee's own name, I would have given ATC deduction. Here FD is not in assessee's own name, so I will not give ATC deduction. This is also understood. That's it with the question. Shall we close the working notes one by one? Come on, you guys, let's close it. Let's come back to working note number 1. Working note number 1 was salaries. 5,40,000, 1,80,000, 22,000 and 2,64,000. This is 10,06,000. Does any adjustment come to your mind at this stage? I'm supposed to remember to subtract. Standard deduction, don't you think? I'm supposed to deduct section 16 deductions. Section 16, we have totally 3 deductions. No professional tax, no entertainment allowance. Straight away, I'll subtract standard deduction of 50,000. So my net taxable salary is going to be 9,56,000. I'll take this to my main answer. Salaries 9,56,000. Then coming to the IFHP, coming to working note number 2, I've already handled this. Coming to IFHP, we have the number already. IFHP number is 1 lakh rupees. So I'll put this 1 lakh rupees over here. Then coming to capital gains, I have 2 numbers. I have 112A of 5970 and 2490 of STCG, 111A. I have 2 numbers, so I need to accordingly keep space for 2 numbers. So therefore, I'll move this to the next line maybe. Capital gains, we have section 112A LTCG and we have section 111A STCG. What was 112A LTCG number? 5,970. 111A STCG number was 2490. IFOS also we've done working note number 6. We have done working note number 6 working here. This is 750 rupees. So what is my IFO is 750 rupees. No other head of income we had. So what is my assessee's GTI? This is going to be 10,65,000 to 10. Guys, I have chapter 6A. Can I straight away subtract chapter 6A? No, before I subtract chapter 6A, I will always remember to split my income into normal rate income, special rate income. Do I have special rate incomes? Yes. 112 LTCG is also special rate income. 111 ASTCG is also special rate income. So what is my total special rate income, everybody? 8460 total special rate income. And what is my normal rate income? The balance of 10,56,750. This is my balance normal rate income. Now I'll subtract chapter 6A. Chapter 6A we can't subtract against special rate income. I'll give reference to working note number 4. Total chapter 6A is how much? We haven't closed the working note yet. Total ATC, if you see, 1,30,000 plus 65,000. This is going to be 1,95,000. Okay. Do we have any ATCCC? No. Do we have ATCCD1? No. So total is 1,95,000, which I will restrict to how much? Which I will restrict to 1,50,000. So 1,50,000 of ATCCE, 25,000 of ATD, total chapter 6 is how much? 1,75,000. This is going to be my total chapter 6A, which I will subtract only against normal rate income. So this is going to be how much? 10,56,750 minus 1,75,000. This is going to be 8,81,750. Do you get this number? 8,81,750. Special rate income 8,460. So total income of my assessee is now going to be 8,90,000 to 10. Okay, this is going to be the normal, the total income of my assessee. But story does not end here. Tell me, is it already in multiples of 10? Do I have to round off? No need to round off. It is already in multiples of 10. They're not only asking me total income, they're also asking me tax liability. Thankfully, they're not asking me about 115 BAC and all. So I can do only the normal tax calculation. Now coming to the tax calculation, I always start with which step? I'll always start with basic exemption limit. My assessee is not a senior citizen. Basic exemption limit is going to be 2,50,000. This 2,50,000 I will always adjust against what first? I will always adjust it against normal rate income first. So if you see the total income of my assessee, it is into two parts. I have 8,81,750 of normal rate income. In fact, it is three parts. Then I have 111A STCG of 2,490, and then I have 112A LTCG of 5,970. Whole basic exemption limit will be adjusted against normal rate income itself. So normal rate income, what will my tax be? Come on, everybody, help me. How will you calculate? Up to 5 lakh, you anyways have to pay how much tax? 12,500 plus 20% of whatever income I have earned in excess of 5 lakhs. Am I right? Yes. So 8,81,750 minus 5 lakhs into 20% plus 12,500. 888,50. 111A STCG, what will your answer be here? What rate do you tax 111A STCG? 15%? 374. What about 112A LTCG? What will you say? Now you will say that it is within 1 lakh rupees. Therefore, no tax. So therefore, 0. So now tell me, total tax, total basic tax, how much? Total basic tax is 89,224. Will you have any 87A rebate? No, because total income is more than 5 lakhs. Will you have surcharge? No, because total income is within 50 lakhs. So straight away, I'll add cess at 4%, which is going to be how much? Which is going to be 92,793, which I will round off to 92,790. Is my story over, or is there anything else I should still think about? Very good, very good. I will still think about AMT because I have that process in my mind. Do not skip steps. Do not skip steps. Follow each step in every question. Tell me, I am starting to think about AMT, but will I have AMT? Do I have chapter 6A part C? No. Do I have 10 AA? No. Do I have 35 AD? No. So therefore, do we have AMT? No. But still, this thinking has to happen. Because examiner is not going to be so kind that he'll tell me, think about AMT also. He is never going to do that. So therefore, we ourselves have to ingrain in our mind the technique, the sequence. That's why I keep telling you, in income tax, the method in which you think, the sequence in which you think is very, very important. This is a sequence in which you're going to be thinking. Once you have the thinking process in your mind, in the examination, you will not skip steps. In the examination, you will not get overwhelmed. When you look at the question, you will know very well what are the steps I'm supposed to do, because your brain knows the steps. So in autopilot mode, your hand will start writing because you know the steps. Are we clear with this? Yes, that is it with the second question. A very, very interesting question. And I would say a question which was filled with a lot of learning. Starting with this point, I'm supposed to take the fair rent not only for the let out period, for the whole year. I will treat as if let out for the whole year. This was my first learning. My second learning was a capital gains adjustment. It was a beautiful adjustment filled with learning in capital gains. And then ATD, I think that was a very good learning for many of you regarding the lump sum point. Right? So that is it about our entire discussion regarding the second question. There's a question in the chat box. Is there step marking if final answer is wrong? Of course, there is step marking. Of course, there is. Provided your steps are done properly, provided the presentation is proper, of course, you will get step marks. All right. So can I take you forward? Can we go to the next question? Sharani, I'll come to that towards the end. I'll discuss that with you all. Are we clear till here? Sharanya, just remind me, okay, towards the end, I'll discuss about that as well. Yes. So let me start off with question number 3 now. Question number 3 is from your basic concepts chapter, okay? So we're done with 2 questions from total income. From total income, I think we will have 1 or 2 questions again, probably a little later. We'll at least this is from total income. We'll be seeing this towards the end. But for now, we're done with 2 total income questions. Now we'll go chapter wise, one by one. Okay. So coming to the basic concepts chapter, from here I've picked 1 question. The assessee is found to be the owner of gold, market value of which is 50 lakhs during the financial year ending 31st March 2022. But he recorded to have spent 10 lakh in acquiring the same. Explain how the assessing officer will deal with the issue. Guys, he has gold, market value is 50 lakhs. He recorded only 10 lakhs. He recorded that he spent only 10 lakhs. So balance 40 lakhs, he is not able to give an explanation. So which section will you apply? Section 115 BBE. 115 BBE says in such case, at what rate will you have to pay tax? You will have to pay 60% tax plus how much surcharge? 25% mandatory surcharge and 4% cess. So effectively, this is going to be how much? Effectively, this is going to be 78%. So you will end up paying 31,20,000. This much tax you will end up paying. This is question number 3. Just wanted to give you a revision about section 115 BBE. Very, very important from the MCQ point of view. Okay. So what's the tax rate? 60%, surcharge rate 25% and 4% cess. Now coming to question number 4. Question number 4 is going to be a very important question for you. Through question number 4, you will end up revising residential status and a little bit about scope of total income. Okay, so come on, have a look at the question number 4. See, this is a residential status question, and I am not sure whether all of you over here who are watching the session have seen my residential status videos and all. I'm not sure. So I'm going to be following my method for residential status over here. Your method for residential status may be different from my method. It is fine. At the end of the day, your answer and my answer should be the same. I just follow a slightly different method for residential status. All right, look at this now. Mrs. Shruti is an Indian citizen and she's currently in employment with an overseas company in UAE. Every word important. Indian citizen, she is in employment with an overseas company in UAE. During the previous year, 21-22, she comes to India for 157 days. She is in India for 200 days, 100 days, 76 days, 45 days in the financial year 17, 18, 18, 19, 19, 20 and 2021 respectively. Her annual income for 21-22 they have given to us. Determine the residential status of Mrs. Shruti for assessment year 22-23. So previous year 21-22, assessment year 22-23, that is what this question is about. Are you noticing? They're not asking me total income. Are you noticing that? What are they only asking me? They're only asking me to find the residential status of Mrs. Shruti. Are you ready? Yes, you're going to have some major learning over here. We just have to find the residential status of this assessee. So answer to question number 4. Listen. Residential status. What kind of an assessee is my assessee? My assessee is an individual. Residential status of individual. There are two provisions. We have the special provision and we have the regular provision. If you want to follow the special provision, you have to fulfill how many conditions? You have to fulfill 3 conditions. Guys, when I say special provision, those of you who don't know all this, special provision, regular provision is just the terminology which I use. Special provision is basically that provision which says 120 days. We have 2 provisions, right? One is 120 days and one is 60 days. That 60 days provision, I call it as regular provision, and that 120 days provision, I call as special provision. That's all. Okay. So if you want to follow the special provision, you have to fulfill 3 conditions. What is the first condition? Tell me. Assessee has to be an Indian citizen or the assessee has to be a person of Indian origin. Is my assessee an Indian citizen or a person of Indian origin? Yes. Second condition. This assessee must be visiting India in the previous year. Is this assessee visiting India in the previous year? Yes, if you notice, the question says she is employed in UAE and she's coming to India for 157 days. She's only coming to India on a visit. Yes, she's visiting India. Now comes the major discussion in this question. What is the third condition? The third condition is that from the total income, if I subtract income from foreign sources, the balance income should be more than 15 lakh rupees. Right, guys? From the total income, if I subtract income from foreign sources, the balance income should be more than 15 lakh rupees. Now tell me, what do you mean by total income minus income from foreign sources? Our whole discussion over here will be regarding this only. What do you mean by total income minus income from foreign sources? This is nothing but income from Indian source. No, Shana, you can't say Indian income. You'll have to say income from Indian source. Income from Indian source means what? Income from Indian source means all those incomes which have a source in India. Either they have a source in India or they are accruing in India or they are arising in India. These are the incomes which are called income with Indian source. Tell me, incomes which are received in India, will I consider them also? No. Incomes which are received in India, that is not Indian source. I'm talking about Indian source. Indian source means it should be having source in India or it should be accruing in India or it should be arising in India. This you know. Now listen. Game changer point. Sit up straight. No background music in your mind. Listen to me with 100% attention. This next point. When you say income from Indian source, for this purpose, wait. Total income minus income from foreign sources. Where and all do you see this condition? You see this condition in 2 places. One, in this special provision, you see this condition. Also, you have the deemed resident concept. No, the deemed resident concept. Even there, you have this condition. So, for these 2 purposes only, I'll repeat again. For these 2 purposes only, one last time, for these 2 purposes only, income from Indian source will include one more thing. I am not saying income from Indian source will always include one more thing. No, generally income from Indian source is just this. But for these two purposes only, income from Indian source will include one more thing, which is what? In case your assessee has any business income from a business which is controlled in India. In case your assessee has any professional income from a profession which is set up in India. Generally, this is not Indian source income. See, you say, right, ROR, global income taxable, RNOR, Indian income taxable, RNOR, Indian income taxable, and incomes from businesses which are controlled in India, professional income from profession which is set up in India, and NR only Indian income taxable. NR, when you say only Indian income is taxable, Indian income means what? Indian income means either the source or accrue or arise, this should be in India, or received should be in India. Tell me, for NR, if it is business income from business which is controlled in India, will you say it is accruing in India? Will you call it as Indian income? No, guys. Are you understanding? So please understand that income from Indian source will also include this only for the purpose of these two things. Otherwise, Indian source will not include this. Otherwise, generally, this is not Indian income. Have this set in your mind properly. Yes, only for these two purposes, only when you do this calculation, only for this calculation, income from Indian source will also include business incomes from businesses which are controlled in India and professional income from profession which is set up in India. Keep this in mind. Now, we have to check whether this condition is fulfilled or not. They haven't given us anything straight away. They have given us this breakup instead. With this breakup only, we have to check whether income from Indian source, is it more than 15 lakh or not. Tell me, income from salary earned and received in UAE, is this income from Indian source? No, it is earned in UAE. It is outside India. It is not Indian source. Income earned and received from a house property in UAE, is this Indian source? This is not Indian source. Income deemed to accrue and arise in India, is this income source? Is this income from Indian source? Yes, because it is accruing in India, it is income from Indian source. Guys, correctly you will tell me this one. Income from retail business, accrued and received outside India, controlled from India. Tell me, in reality, is it income source? Is it Indian source? Tell me, in reality, is it Indian source? Actually, is it Indian source? No, because accrued outside India. In reality, it is not Indian source. But what are we calculating? For the purpose of special provision, for the purpose of deemed resident, for this calculation, income from Indian source will also include incomes from businesses which are controlled in India. So 10 lakh, should I consider? Should I not consider? Yes, I should consider. Biggest learning from this question. Okay, then income accruing and arising in India, should I consider? Is it income from Indian source? Yes, accruing in India, I will consider. So, and life insurance premium paid by check in India, will I consider this? Yes, even this is paid in India, I will consider. So what is my income minus Indian, what is my income from Indian sources? Income from Indian sources, 5 lakh plus 10 lakh plus 3 lakh minus life insurance premium paid, 1,50,000. What's the net income? Tell me. Why did I subtract life insurance premium? ATC, guys. This is going to be how much? 18 lakhs minus 1,50,000. This is going to be 16,50,000, which is more than 15 lakhs. So total income minus income from foreign sources, is it more than 15 lakhs? Yes, it is more than 15 lakhs. We're understanding. I am supposed to check total income minus income from foreign sources. Total income minus income from foreign sources means income from Indian source. Income from Indian source means not only should it be accruing in India. See, generally income from Indian source means it should be accruing in India. But just for the purpose of this special provision, just for the purpose of deemed resident, in both of these places, you have this condition. When you have this condition, just for the purpose of this condition, income from Indian source will also include income from businesses which are controlled in India and incomes from professions which are set up in India. So that is why, if you see, I've considered this particular point. Rest of it you must have understood. Rest of it is normal. Income deemed to accrue and arise in India, this is having a source in India. Income from retail business accrued and received outside India. It is earned and received outside India, but it is controlled from India. So this is not fitting under this point, but it is from a business which is controlled in India. It is fitting under this point. So even this 10 lakh, I will consider. Income accruing in India. This is obviously income from Indian source. Even this I will consider. I paid LIC in India. I paid LIC premium in India. So even this I will consider. Okay, so this becomes an expense, but this becomes an expense, and that is why I subtracted it. So 5 lakh plus 10 lakh plus 3 lakh, these three incomes minus ATC 1,50,000. So what is my income from Indian source? My income from Indian source is 16,50,000, which is more than 15 lakh, and therefore even this condition is fulfilled. Yes, the student who is asked about life insurance premium, did you understand? I did not add the life insurance premium. I subtracted it because it's an expense. I paid the expense, right? So that is why I subtracted it. Because ATC, you subtract ATC, right? That's the reason. Understood? Yes, then Sharon, I'm hoping you understood. I've re-explained it to you. Now, so which means all the conditions are fulfilled. Therefore, I can say that special provision is applicable. Now, what does a special provision say? Basic condition 1. In the previous year, you must have stayed in India for how many days? In the previous year, you must have stayed in India for at least 182 days. Now, tell me, did we stay in for 182 days? 21, 22 we're talking about. 21, 22, she comes to India for only 157 days, guys. 182 days condition fulfilled? No. Now comes basic condition 2. Tell me, basic condition 2, should I pause? Should I think about Indian citizen leaving India? Should I think about Indian citizen leaving India as crew member of an Indian ship? Should I think about Indian citizen leaving India for employment, business, profession outside India? No. All that, when do I think? All that I think only in regular provision. Special provision, basic condition 2 will always apply. I must always think. What does basic condition 2 say? Previous year, I must have stayed in India for at least 120 days, and 4 preceding previous years, you must have stayed in India for at least 365 days. Now tell me, previous year, did we stay in India for 120 days, guys? 157 days we have stayed. So yes, we have stayed for at least 120 days. And 4 preceding previous years put together, have we stayed for 365 days? 4 preceding previous years, definitely it is crossing 365 days. So one basic condition fulfilled. So therefore, as of now, what can I conclude? I can conclude that this assessee is a resident. Now, because this assessee is a resident, tell me, how many additional conditions will I check? I will check 2 additional conditions, right? No, I'll check 3 additional conditions. Special provision. Therefore, I'll check 3 additional conditions. What is the first additional condition? The first additional condition is that basic condition 1 should be fulfilled. Tell me, is basic condition 1 fulfilled? Basic condition 1 is not fulfilled. So I don't even have to check anything else. I can straight away conclude assessee is RNOR. Okay, so additional condition 1 is that basic condition 1 should be fulfilled. Additional condition 2 is that 7 preceding previous years assessee must have stayed in India for how many days? 7 preceding previous years, at least 730 days. And last additional condition is that at least 2 out of 10 preceding previous years assessee must be a resident. Okay, so 3 conditions we have. All the 3 conditions should be fulfilled. Only then you can say ROR. So even if one condition is not fulfilled, I will conclude assessee as RNOR. All right, so this was our entire discussion relating to the residential status of this assessee. A very, very important question from residential status. Nowadays, they are slowly shifting their focus on this point. If you see last few examinations, last few RTP, MTP and all, if you see, they have been shifting their focus towards this. Mufid, answer is no. No. Are you understanding, everybody, this particular point you understood? So income from Indian source will not only include income which is earned in India, but just for this purpose. It will also include business incomes from businesses which are controlled in India and professional incomes from professions which are set up in India. So all the 3 conditions were fulfilled. Therefore, special provision was applicable. Basic condition 1 says in the previous year, assessee should stay in India for at least 182 days. That condition was not fulfilled because assessee had stayed in India for only 157 days. Okay, then after that we had discussed about basic condition 2. Basic condition 2 says in the previous year you must have stayed for at least 120 days and 4 preceding previous years you must have stayed for at least 365 days. Now this condition was fulfilled. So we concluded assessee is a resident. Now, we have 3 additional conditions in special provision. The first additional condition is that basic condition 1 should be fulfilled. If basic condition 1 is not fulfilled, I can immediately conclude assessee is RNOR. Okay, had my additional condition 1 been fulfilled, then I would have thought about additional condition 2 and 3 also. Here, one additional condition is not fulfilled. I can straight away conclude assessee as RNOR. Are we crystal clear with this? Can I close this question? Can I take you to the next question from residential status? Yes, guys. Yes, some of you might have a different method of doing residential status calculations. You can do this same question from your own method also. You should be getting the same answer only. Yes, there are multiple methods in which residential status can be calculated. So whatever method you have learned, you can follow that. Even you should be getting the same answer. All right. Now coming to the next question, which is question number 5. Question number 5. Question number 5 is again from residential status. This is a very interesting question, guys. Through question number 5, multiple points, multiple small points under residential status will get covered. Okay. Now listen. Question number 5. Let us read the question once. The question says, Mr. Thomas, a non-resident. Guys, they have themselves given us that he's a non-resident. So because he's a non-resident, what kind of incomes will you tax for him? Tell me. Number 1, you will tax for him all Indian incomes. Indian incomes means what? Incomes either which have a source in India, or they accrue in India, or they arise in India. Number 1, you will tax this income. And number 2, you will also tax all those incomes which are received in India. Keep this in mind. He's a citizen of Japan. He entered into the following transactions during the previous year ended 31st March 2020. So previous year 1920, this is our subject matter. Examine the tax implications in the hands of Mr. Thomas for assessment year 2021 as per Income Tax Act. They have given us 4 transactions, guys. We just have to examine tax implications, which means we just have to say whether taxable, whether not taxable. Remember, assessee is a non-resident. Because assessee is a non-resident, only Indian incomes you will say is taxable. We'll go point by point. Point number 1. Interest received from Mr. Marshall, a non-resident outside India. The borrowed fund is used by Mr. Marshall for investing in Indian companies' debt fund for earning interest. Now listen, but before I start discussing this, I need you guys to tell me, how good are you all in royalty, interest and FTS? That whether it's accruing in India, whether it is not accruing in India, are you good enough in it? If you're good enough in it, I'll straight away discuss this particular provision and I'll proceed. Right, guys? Can I just do that? Do you have basic knowledge about royalty, interest, FTS? Yes, listen to me now. So in this question, see, always remember one small hint I'll give you. Whenever it is royalty, interest, FTS, you will always see who the giver of the income is. You will always see who the giver is. You'll always start with that. Who is the giver over here? Mr. Marshall. What is Mr. Marshall? Mr. Marshall is a non-resident. So non-resident is giving interest income to whom? To Mr. Thomas, who is also a non-resident. So non-resident giver, non-resident recipient. This is a story first of all. Now listen, why is the non-resident giver giving interest? Because the non-resident recipient would have lent a loan, right? See, Mr. Marshall is giving interest to Thomas. Why is Marshall giving interest to Thomas? Because Thomas would have given a loan. Now listen, non-resident is giving interest. Guys, non-resident is giving interest. What will your first answer be? Your first answer will be that this interest is going to accrue outside India. How many exceptions you will have? You will have only one exception. What is that one exception? That one exception is you will check, is the loan being used for business or profession in India? Is the loan being used for business or profession in India? What is Marshall doing with the loan? He is using the loan for investing in Indian companies' debt fund. So guys, tell me, is he using the loan to do business or profession in India? No, he is using the loan to buy an asset in India. He is using this loan to invest money in India. He is using the loan to buy investment in India. He is not using the loan for a business or profession in India. So exception will not apply. So therefore the general rule will apply. So therefore what will you conclude? It is accruing outside India. Now, where is it received? Have they mentioned where is it received? They have not mentioned where it is received. If nothing is mentioned about receipt, you will assume received in the same place. So you will assume received also outside India. So guys, listen, it is accrued outside India. It is received outside India. So therefore, what will you conclude? You will conclude it is not an Indian income. Because it is not an Indian income, will it be taxable for my non-resident recipient? It will not be taxable. Is this clear? Yes. So guys, when it comes to royalty interest FTS, it always depends upon who the giver is. If the giver is a non-resident, your first answer will be accruing outside India. Then how many exception you will have? Only one exception you will have. And that is, you will see what is the loan used for. If the loan is used for business or profession in India, then you will say accruing in India. In this question, Marshall did not use the loan for business or profession in India. Marshall used the loan only for investing in India, not for doing business or profession in India, not for business or profession in India. Right. So therefore, exception is not applicable. Therefore, accruing outside India. They did not say where it is received. So I will assume received also in the same place. I'll assume received also outside India. So accruing outside India, received outside India, it becomes not an Indian income, foreign income, therefore not taxable. Guys, I just want to spend 2 more minutes. I'm getting tempted. Can I give you a revision of this royalty interest FTS properly? Because I'm not too sure whether everybody is comfortable with it, and it's very, very important. You will for sure get a question from here. Okay. So those of you who do know already, it will be a revision for you. And those of you who don't know, you will get benefited. Okay. Listen, for sure you're going to be getting a question. Listen, okay. What are we talking about? We're talking about royalty, interest, and FTS. Okay, 3 things we're talking about. Only 3 things we're talking about. You will always see who the giver is. If the giver of income is central government or state government, if they are giving you royalty, interest, or FTS, whether royalty, interest, or FTS, if central government or state government is giving, do you even have to check anything else, guys? No. If central government, state government is giving, you will straight away conclude that it is accruing in India. You will straight away conclude it is accruing in India. If it accrues in India, it automatically becomes an Indian income. If it becomes an Indian income, it will be taxable for all assessees. First point. Okay. Now coming to the second point. Second point, you'll always check who the giver is. If the giver is resident. See, resident means what? Resident will include both, whether you are ROR, whether you are RNOR. End of the day, you are a resident. Even when you say senior citizen means what? Senior citizen means individual, resident, at least 60 years, right? So even over here, when you say resident means what? ROR, RNOR, whatever. Both are resident end of the day. So therefore, coming back, if the giver of the income is a resident, if the resident, I'm talking only about interest now. If the resident is giving interest to the assessee, why is resident giving interest? Because assessee would have given loan to the assessee, loan to the resident, guys. Now, if resident is giving interest, guys, resident is giving interest, what will your first answer be? Your first answer will be it is accruing in India, therefore it is an Indian income, therefore it is taxable. But guys, if resident is giving you interest, then you will have how many exceptions? You will have 2 exceptions. See, generally, how many exceptions you have? Generally, everywhere, only 1 exception you have. But when a resident is giving you interest, then you have 2 exceptions. Registered in your mind, generally only 1 exception we have. But when resident is giving me interest, I will have 2 exceptions. First exception, is a resident using the loan for a business or profession outside India, or is he using the loan to buy some asset outside India? Asset means what? Asset means, is he using the loan to buy some source of income outside India? We have 2 exceptions. Is he using the loan to do some business or profession outside India? Is he using the loan to buy some asset outside India? If that is the case, then you will say that it is not an Indian income. Did you understand the resident part? Yes, if resident is giving you interest, come on, everybody tell me. If resident is giving you interest, your first answer will be it is accruing in India. First answer will be it is accruing in India, therefore Indian income, therefore taxable for all assessees. But however, if this, we'll also have to check that the resident is using the loan for what? If he's using the loan for a business or profession outside India, or if he's using the loan to buy some asset outside India, then you will say it is not an Indian income. Understanding, guys? Now listen, this was only interest, but 2 more things we have to talk about: royalty and FTS. If resident is giving your assessee royalty, or if he is giving your assessee FTS, guys, resident is giving, so immediately what will your answer be? Immediately your answer will be that it is going to accrue in India, therefore it becomes an Indian income, and therefore it's going to be taxable. Now tell me, only Resident interest, I told you 2 exceptions. Everywhere else, how many exceptions I told you? Everywhere else, only 1 exception. So even over here, you will have only 1 exception. The exception is that if the royalty or FTS is relating to business or profession outside India, then you will say it is not an Indian income. Right, guys, are we clear? So we have discussed 2 parts. We have discussed what if the giver is central government, state government, and what if the giver is resident. If the giver is resident and resident is paying interest, you have 2 exceptions. Everywhere else, you have 1 exception. So first 2 discussions are perfectly clear. Yes, now let me take you to the third discussion, non-resident. This time a non-resident is giving interest to the assessee. See, if non-resident is giving interest to the assessee, why is he giving interest? Because assessee would have given a loan. If non-resident is giving interest, what will your first answer be? Your first answer will be non-resident is giving, therefore accruing outside India. Alright, but however, tell me, how many exceptions will you have? Will you have 1 exception or will you have 2 exceptions? Only when resident gives interest, you will have 2 exceptions. Everywhere else, only 1 exception, guys. What is that 1 exception? Is a non-resident using the loan for a business or profession in India? If he is using the loan for business or profession in India, then it will become an Indian income taxable for all assessees. Okay, and lastly, if the non-resident is giving the assessee royalty or FTS, what will your first answer be? Non-resident is giving. So obviously, what will your first answer be, guys? Your first answer will be that it is accruing outside India. Do you agree? Your first answer will be it is accruing outside India. But tell me, how many exceptions will you have? How many exceptions will you have? Only resident interest, you have 2 exceptions. Everywhere else, only 1 exception. So only 1 exception you will have. Is it relating to business or profession in India? If it is relating to business or profession in India, then you will say it is an Indian income taxable for all. Okay, this chart which I have made for you over here, it will never ever go wrong for you. It's very simple. Only resident interest, 2 exceptions. Everywhere else, 1 exception only. Now shall we try to apply this question again in this whole chart, guys? Shall we see if we are able to fit it in this chart? The question says interest received from Mr. Marshall, a non-resident. So who is a giver? The giver is a non-resident. Non-resident is giving interest. Non-resident is giving interest. What will my first answer be? My first answer will be accruing outside India. Tell me, how many exceptions do I have? Non-resident is giving exception, or non-resident is giving interest. Only 1 exception I will have. Tell me, is a non-resident using the loan for business or profession in India? No, he is using the loan for investing in India, not for business or profession in India, which means exception over here is not applicable. Therefore, my accruing outside India, this rule only will apply. And also, it is received outside India. So, therefore, it becomes a foreign income. Therefore, not taxable. Story clear? Yes. Come on, quick response. Tell me, did you understand this, everybody? Yes. Now listen, come to the second subdivision now. This one correctly you should tell me. He received 10 lakh rupees in Japan from a business enterprise in India for granting license for computer software. This is nothing but royalty. He has received royalty. It always depends upon who the giver is. He received from a business enterprise in India, which means who is the giver? Tell me. Who is the giver? The giver is a resident, business enterprise in India. If resident is giving you royalty, what's your first answer? Your first answer will be accruing in India. How many exceptions? Only resident interest, 2 exceptions. Everywhere else, only 1 exception. Here, resident royalty, only 1 exception. Tell me, is a royalty relating to business or profession outside India? The question says receive 10 lakhs in Japan for granting license for computer software. It does not say it is relating to business or profession outside India. So which means this exception which I showed you over here, this exception is not going to apply. So accruing in India, therefore what will your answer be? Indian income, and therefore your answer will be taxable. Okay, then coming to the third point, he engaged in the business of running news agency. He earned income from collection of news and views in India for transmission outside India. What about this? This is a very special point. If your assessee is just in the business of collecting news and transmitting outside India, then you say that it is not accruing in India. See, listen, 2 points, okay? If your assessee is a non-resident and if this non-resident is in the business of purchasing goods, he purchases goods in India and then he exports them outside India. This is his only business. So will you say that his income is accruing in India? No, this is an exception. His income is not accruing in India. Similarly, if your assessee is a non-resident and if he's in the business of collecting news, his only business is that he collects news in India and then he transmits this news in India. If this is his only business, then whatever income he has earned, we will assume it is not accruing in India. It is not accruing in India. So here, if you see, he's a non-resident. We know he's a non-resident over here, and he's in the business of only collecting news and transmitting it outside India. So therefore, it is not accruing in India. It is not accruing in India. The question does not say where it is received. So I will assume it is also not received in India. Not accruing in India, not received in India. Is it an Indian income? It is not an Indian income. Therefore, what will your final conclusion be? Your final conclusion will be it is not taxable for him. Right, guys. Then coming to the last subdivision, he entered into an agreement with SKK & Co., a partnership firm, for transfer of technical documents and design and for providing service relating thereto to set up a denim jeans manufacturing plant in Surat, India. He charged 10 lakh for these services. What is this? Fee for technical services. It always depends upon who the giver is. Who is the giver over here? SKK, a partnership firm. Nothing is said whether it is resident or whether it is non-resident, whether resident is giving FTS or whether non-resident is giving FTS. Nothing is mentioned. So what will we do? Come on. We'll have to assume from both the points of view. We don't know whether resident is giving FTS or whether non-resident is giving FTS. So we will think from both the points of view. If resident is giving FTS, what is your first answer? Your first answer is accruing in India. How many exceptions? Only one exception. Tell me, is SKK & Co. is the FTS relating to business or profession outside India? No, it is relating to what? A denim jeans manufacturing plant in Surat. In India. Is it relating to business or profession outside India? No. So what will you answer? If it is, if a resident is paying, you will say accruing in India, Indian income, therefore taxable. Now, let us assume what if non-resident is paying. If non-resident is paying, first answer will be accruing outside India. But how many exceptions, guys? One exception only. Tell me, in this question, is FTS relating to business or profession in India? Yes, we just now read, no, it is relating to the denim jeans plant in Surat in India. So exception will apply. It is relating to business or profession in India. Therefore, it will be Indian income and therefore taxable. So whether resident is giving, whether non-resident is giving, what is my final answer? My final answer is it is an Indian income and therefore it is going to be taxable. You understood? So when they don't tell us who the giver is, we have to think from both the points of view. And I'll tell you something, when you think from both the points of view, in each and every case, your answer will be the same. Like how here, if you see even over here Indian income, even over here Indian income, that's how it will always be. If they don't give you who the giver of the income is, both the points of view you will think and both the points of view will give you the same answer only. This was question number 5. Through question number 5, we had a very, very important discussion relating to royalty interest in FTS. Are we feeling at least a little bit better? Yes, are you learning something through every question? Yes, guys, there should be something getting better for you after every question. Only then it's going to make sense. Right, guys, can I take you forward? Can I go to the next question? Can we proceed? Yes, are you ready? Come on, guys. Let's go to question number 6. Question number 6 is one last question from residential status and scope of total income. But this question I've brought in such a way that multiple adjustments will get covered for you through this one question. Through this one question, even royalty interest FTS will once again get revised for you. Okay, so let us begin, guys. Let us begin. Let's discuss question number 6. All right. Let us read this first. What does it say? It says Mr. Kunal is an Indian citizen and he's a member of the crew of a Thailand-bound Indian ship engaged in carriage of passengers in international traffic departing from Port Blair on 10th July 2017. His stay in India in last 4 previous years, preceding previous year 17-18 is 375 days and 7 preceding previous years is 729 days. Date entered into the continuous discharge certificate in respect of joining the ship, and date entered into the continuous discharge certificate in respect of signing of the ship they have given to us. Then they have given to us all the income which he has earned during the year. They are asking us to find the total income of Kunal for assessment year 18-19, which means we have to do this calculation for previous year 17-18, that is assessment year 18-19. Guys, they're asking us to find total income. Is it possible to straight away start total income calculation when they have given me all this information? No, it is obvious. I first of all have to calculate the residential status of the assessee. On the basis of the residential status, I have to decide the scope of total income. Scope of total income means which income will be taxable for this assessee, Indian income, foreign income, which income will be taxable. Only then I can do the total income computation. So we will do this answer in 3 parts. Okay, coming to the first part, coming to the residential status part. Now listen, same thing like how I had done for you even in the question before the last question. Assessee is an individual. So we always think about 2 provisions, the special provision and the regular provision. We always give priority to the special provision first. Special provision, how many conditions do we have? We have 3 conditions. Condition number 1, the assessee should be an Indian citizen or the assessee should be a person of Indian origin. Is this condition fulfilled? Yes, Mr. Kunal is an Indian citizen. Condition fulfilled, guys. Now tell me, what is a second condition? We just discussed it in the last question. Tell me, what is a second condition, everybody? Second condition, my assessee should be visiting India in the previous year. Tell me, in 17-18, is my assessee visiting India? No, instead he's a crew member of an Indian ship, guys. He is leaving India. He is not visiting India in the current year. So this will not apply. So I did one question for you from special provision, and now I will do one question for you from regular provision. Special provision will not apply. One of the conditions is not fulfilled. Special provision will not apply. Therefore, what will we apply? Therefore, we will apply the regular provision. Is this clear? Now, what does regular provision say? Regular provision says, point number 1, basic condition 1 should be fulfilled. Basic condition 1 says, previous year you must have stayed in India for at least 182 days. Did he stay in India for 182 days in 17-18? They did not tell us. We only have to calculate. But then they have told us that what are the dates written in the CDC? When did he join the ship and when did he sign off from the ship? They have told us. So in 17-18, how many days is he in India? Tell me. April, how many days? 30 days. May, how many days? 31 days. June, how many days? 30 days. Carefully tell me. July, how many days? 9, 10, 11. July. See, generally, the date on which you come to India and the date on which you leave from India, both are considered as if you are in India. Right, guys? Generally, whenever you leave India, the date on which you leave India and the date on which you come to India, both are treated as if you are in India. But in CDC cases, whatever date is written in CDC, you are outside India. So in July, you are in India for how many days? In India, you are only for 9 days. Generally, date on which you come to India and date on which you leave India, both are treated as if you are in India. The date on which you come to India, the date on which you leave India, both are treated as if you are in India. But only in CDC cases, the dates which are written in CDC, even these dates we treat as if you are outside India. So 10th, you are not in India. So I will not count 10th, I will count only 9. Now tell me, in January you're coming back. Can you please calculate and tell me, in January, how many days is he in India? In January, he's in India only for 10 days. How 10 days, guys? 21st, I will not count. 21st, he's outside India. Only 22 onwards, I will count. So 31 minus 21. I will not count 21. 31 minus 21, which when I do this, I'm not counting 21, right? So if I'm counting 21, I'll add 1 also. But I'm not going to add 1. I'm not going to count 21st because even 21st, he is outside India. So January, 31 minus 21, total 10 days he is in India. February, how many days, guys? not a leap year. So 28 days and March 31 days. So in the previous year, he is in India for how many days in the previous year? In the previous year, he is in India. Excuse me. Yeah. So tell me, in the previous year, he is in India for only 169 days, which is within 182 days. Basic condition 1 not fulfilled, guys. Yes. Now comes basic condition 2. Now, basic condition 2, guys, regular provision, basic condition 2, what are you supposed to do? Pause. Think, is my assessee an Indian citizen leaving India as a crew member of an Indian ship? Yes, my assessee is an Indian citizen. He is leaving India as a crew member of an Indian ship. Therefore, will the basic condition 2 even apply? Basic condition 2 will not even apply. So, basic condition 1 is not fulfilled. Basic condition 2 is not applicable. What can I conclude? I can conclude that my assessee is a non-resident. So because my assessee is so residential status is clear. Residential status, he is a non-resident. So what is the scope of total income? What kind of incomes will be taxed? Only Indian incomes. That is incomes which have a source in India or incomes which are received in India. Only these incomes will be taxed. Now can we do the computation of total income of this assessee? Yes, guys, only Indian incomes, okay? Let us compute the total income. Tell me, we'll go one by one. Dividend from a Thailand company received in Thailand. He's a non-resident. Will you consider this income? Will you consider this income? I will not. Why will I not? Because it's from a Thailand company. So the source is outside India. It is also received outside India. So I will not consider. Then STCG on sale of shares of an Indian company. Shares of an Indian company. You transferred an Indian asset. Because you transferred an Indian asset, you can say source is in India. So can you consider this 25,000? Yes. We have STCG 25,000 we have. Then interest on savings account with post office. Can you consider this? Let us say Indian post office, let us say, can you consider this? Yes. So interest on savings account with post office 13,000. Is there anything that comes to your mind? Post office savings interest, you get one deduction, no. You get one exemption. How much exemption will you get? 3,500 will be exempt here itself. So how much will be taxable for you? Only 9,500 will be taxable for you. You all remember this, right? Post office interest, here itself you will get 3,500 exemption, and later one more deduction you will get. Which section deduction you will get? Assessee is not a senior citizen. Therefore, ATTTA you will get. You will get ATTTA. Right, guys? You will get ATTTA deduction. ATTTA maximum, how much will you get? ATTTA you will get only 10,000 maximum, but ATTTA we will do a little later. Now come to this point. Past foreign untaxed income. It is past income. Past foreign untaxed income. Do we even consider this? Past incomes you will not tax in the current year. It is past income. So go to that year and tax it in that year. Don't bring it to me now. Then cash gift received from a non-relative. 20,000. What about this? See, we don't know whether it is Indian income, whether it is foreign income. We don't know. But 20,000. It is anyways within. It's anyways within 50,000, guys. So therefore, it's anyways going to be exempt only. Then, income from agricultural land in Nepal received there and then brought to India. Income from agricultural land in Nepal, received there and then brought to India. Tell me, where's the source of this income? The source of this income is in Nepal. Where is it received? It is received also in Nepal. So what does it become? It becomes a foreign income. So will you even consider this? You will not consider this. What about then brought to India? What about this? What about this particular point? This is nothing but remittances. What do we do with remittances? We never even consider remittances. We only ignore remittances. Are you understanding? We do see what we consider is where did you earn it and where did you receive it. After you received it, what did you do with the income? We don't care about it. Then coming to the last point, interest received. This one correctly you will tell me. Okay, interest received from a non-resident on monies borrowed for the purpose of business in Delhi. Interest received from a non-resident. Guys, without looking at the chart, tell me, non-resident is paying you interest. First of all, what will you say? First of all, you will say outside India. Non-resident is paying you interest. How many exceptions will you have? You will have only one exception. Is the loan being used for business or profession in India? Yes, the loan is used for business in Delhi. So exception will apply, and you will see that this interest is accruing in India. Because this interest is accruing in India, it will become an Indian income, therefore it will become taxable. So 1,50,000 will also be taxable for him. Are you noticing with those charts, royalty interest and FTS has become so easy? Easily you were able to answer this. I'm very sure very easily you would have been able to answer this. How did we think, guys? Non-resident is paying interest, so immediately I will say accruing outside India. But non-resident is paying interest, only one exception I will have. Is it relating to business or profession in India? Yes. Because it is relating to business or profession in India, it is an Indian income and therefore it's going to be taxable. So now if you add up, what is going to be the total income of your SSE? What is going to be the total, the gross total income of your SSE? 25,000 plus 9,500 plus 1,50,000, you'll be getting 1,84,500, guys. Now, ATTTA also was pending. Remember, ATTTA was pending. Now, before I do the ATTTA discussion for you, can I give you one quick revision of both ATTTA and ATTTB? This is a section which you will definitely find in your examination, okay? And 99% of the students think they know this, but actually they don't. Listen carefully. Out of these two sections, which of the two will you always try to do first? You will always try to do ATTTB first because this is more beneficial. Only if this is not applicable to you, only then come to ATTTA. Otherwise, you always try ATTTB first. ATTTB, who is your SSE? Tell me, who is your SSE? Your SSE has to be either a senior citizen or a super senior citizen. Now, senior citizen means what? Senior citizen means SSE. Senior citizen is not just 60 years. Senior citizen is 3 conditions. SSE should first of all be an individual. SSE should be a resident, and SSE should be at least 60 years. So, guys, did you understand? Senior citizen is not just 60 years. Senior citizen is 3 conditions. Super senior citizen means what? SSE has to be an individual, SSE has to be a resident, and SSE has to be at least 80 years. Only then you can call him a super senior citizen. So my first condition is that SSE has to be either a senior citizen or a super senior citizen. Now this SSE should have received interest income. Should have received interest income from whom? Either he could have received it from a bank, or he could have received it from a cooperative bank, or he could have received it from a post office. Okay, now what kind of interest? It doesn't matter. It can be any interest. Like for example, it can be savings interest, it can be savings account interest, or it can be FD interest, or it can be RD interest. It doesn't matter. It can be any interest. This interest income deduction you will get under ATTTB. Maximum how much deduction will you get under ATTTB? Maximum 50,000 deduction you will get under ATTTB. Okay, if ATTTB is not applicable to you, welcome to ATTTA. In ATTTA, who should your SSE be? Your SSE should be either an individual or your SSE should be a HUF. Now, which individual? Only that individual to whom ATTTB is not applicable. Only that individual will fit under ATTTA, obviously, guys, right? So, SSE can be an individual to whom ATTTB is not applicable, and SSE can be a HUF. Now, this SSE is receiving interest. From whom is he receiving interest? Even over here, the interest can either be from a bank, or the income can be from a cooperative bank, or it can be from a post office. Doesn't matter. But what kind of interest? Here we are talking only about savings interest. Here I can't talk about all the 3 interest. I can talk only about savings interest. Only I can talk about. Here maximum how much deduction will I get? Here maximum 10,000 rupees deduction only I will get. Now, to get even more clarity on ATTTA and ATTTB, can you please help me differentiate between ATTTA and ATTTB? If you're able to differentiate properly, that's all. You understood them now. Tell me, differentiation between ATTTA and ATTTB. Point number 1, maximum how much? Maximum in ATTTA, 10,000. ATTTB maximum how much? ATTTB maximum 50,000. Then tell me, in ATTTA, what kind of interest? Here I'm talking only about savings interest. ATTTB, what kind of interest? ATTTB, it can be savings interest, it can be FD interest, it can be RD interest, it can be any interest. Then tell me, does ATTTA cover HUF also? Yes. But does ATTTB cover HUF also? No. Then tell me the 4th point. Tell me, is resident covered under ATTTA? Yes. Is even non-resident covered under ATTTA? Yes. But don't you think under ATTTB, you have to be either a senior citizen or a super senior citizen, which means you have to be a resident. So which means ATTTB is only for resident guys. Yes. And lastly, point number 5, ATTTB is for which individual? ATTTB is for that individual who is senior citizen or super senior citizen. ATTTA is for which individual? It is for that individual for whom ATTTB is not applicable. If you've understood this differentiation, any question under ATTTA, ATTTB, without even any mistake, you will be able to handle. Okay, now coming to this question, my assessee has savings interest with post office. He is a non-resident. Can I even think about ATTTB? He is a non-resident. Can I even think about ATTTB? Of course, I can't think about ATTTB because ATTTB is only for resident, but my assessee is a non-resident, so I have to think about ATTTA only. It is from post office. Is post office covered? Yes. Is savings account covered? Yes. How much interest? 9,500. Maximum deduction 10,000. So how much deduction will you give? You will give 9,500. So therefore, what is going to be our assessee's final total income? 1,75,000. This was question number 6. 6 or 7. Question number 6 for you. Clear? Yes, guys, one last question I have for you. Okay, listen to me. Wait. One question I have for you. Assessee has earned agricultural income. Agricultural income can be from India. It can be outside India. In India, it can be from urban agricultural land. It can be from rural agricultural land. Assessee has earned agricultural income from outside India. Will you give section 10(1) exemption? It is from outside India. No 10(1) exemption. It is in India from urban agricultural land. Will you give 10(1) exemption? Yes. It is from rural agricultural land. Will you give 10(1) exemption? Yes. In India, urban area, rural area doesn't matter. Which is the only place where urban area, rural area matters? Capital gains. That's it. Everywhere else, urban area, rural area will not even make a difference for you. Okay. That is it about this question, guys. So with this, we're done with question number 6. Now, can I take you forward to question number 7? Right? We have 2 questions. Question number 7 and 8, these 2 questions are from your exempt incomes chapter. You have that chapter, right? That chapter regarding incomes which are not forming part of total income. That 3rd unit from your study material. So this question is from that 2 questions we have from there from exempt incomes. Question number 7 and question number 8. Question number 7 is regarding 10AA and question number 8 is regarding agricultural income. Okay, let us discuss. Question number 7. Mr. Ramesh furnishes the following particulars for the previous year 1920. So we're talking about previous year 1920 in respect of an industrial undertaking established in SEZ in March 2014. It began manufacturing in April 2014. Now they've given us information, total sales, export sales, domestic sales, and profit from the above undertaking. Export sales include freight and insurance of 5 lakhs for delivery of goods outside India. Compute the amount of deduction available to Mr. Ramesh under section 10AA for assessment year 2021. Okay, they're asking us for assessment year 2021. For previous year 1920, they're asking us how much deduction will you get under section 10AA, they're asking us. So our discussion right now is regarding section 10AA. Now, whenever it comes to the section 10AA questions, I always suggest students to follow a 3-step approach. I'll tell you what the 3-step is. The first step is going to be applicability. The second step is going to be year. And the third step is going to be the formula. Okay, always follow this 3-step approach. Whenever it comes to section 10AA question, you will for sure not make a mistake. This 3-step approach. What are the 3 steps? First step is applicability, second step is year, and third step is formula. Now listen, Applicability. Under applicability, you have 3 conditions. Condition number 1, assessee must be having a unit in the SEZ. Does my assessee have an SEZ unit? Yes. And this assessee should either be manufacturing goods from this unit or he should be rendering services from this unit. In this question, if you see, he's having an industrial undertaking. Industrial undertaking means he's going to be a manufacturer. So yes, even this condition is fulfilled. And condition number 3, this particular unit should have started manufacturing, should have commenced the activities on or before 31st March 2020. So if all these 3 conditions are fulfilled, then you can say that yes, section 10AA is applicable. 10AA is applicable. Now listen, we need to after this check that which year are we in right now. See, the question says it began manufacturing in April 2014. And right now we are in which year? Right now we are in previous year 1920. Assessment year 2021 means previous year 1920. So previous year 1920. And when did we commence, guys? We commenced in April 14. April 14 will be previous year 14-15. So which year are we in? We are in the 5th year, but you always add a 1. You say that we are in the 6th year. Why 6th year, guys? Why like this? Because even the year in which you commenced manufacturing, even that year has to be considered. No. So 14-15 will be the first year, 15-16 will be the second year, 16-17 will be the third year, 17-18 will be the fourth year, 18-19 will be the 5th year, and 19-20 will be the 6th year. Are you understanding? Don't straight away take the difference, add a 1, because even the year in which you commenced manufacturing, even that year you're supposed to consider. So you are in the 6th year. So because you're in the 6th year, how much deduction will you get, guys? 50%, right? First 5 years, 100%. Next 5 years, 50%. Next 5 years, 50%, or amount transferred to SEZ reinvestment reserve, whichever is lesser. So this is in the 6th year. So which is 6th year, you're going to get 50%. 50% of what? 50% of net profit. 50% of net profit from what? 50% of net profit from export. 50% of net profit from export of which unit? 50% from net profit of export from SEZ unit. So this is the amount which you're going to get as a tax holiday, as a deduction under section 10AA. After this, we have a formula, 50%, right? So 50% of what? Net profit. But 50% of net profit only from export. So this net profit will be from total sales. So 50% of net profit into export sales by total sales. This is a formula, guys. Right? So 50% of what is the net profit in this question? What is the net profit of our assessee? Net profit of our assessee is 20 lakhs into export sale. Export sale, can I take 45 lakhs as it is? No. The question says export sales include freight of 5 lakhs. It is not supposed to include freight. So from 45 lakhs, I will remove 5 lakhs. So how much export sale will I consider? I'll consider export sale only 40 lakhs only I will consider. Now tell me, 40 lakh export sale, domestic sale 40 lakh, total sale 85 lakh. Is it matching? It is not matching. So even 85 lakhs, I will consider it as 80 lakhs. How 80 lakhs? Even over here, I will subtract the 5 lakhs freight, and so this will become 80 lakhs. Right, guys? See, 85 lakhs total sales. This total sales includes 45 lakhs of export sale and domestic sale of 40 lakhs. If this 45 lakhs I'm reducing to 40 lakhs after subtracting freight, even total sale I have to reduce to 80 lakhs, right? That's what I have done. So export sale is 40 lakhs and total sale is 80 lakhs. So how much 10AA deduction are you going to get? How much 10AA deduction are you going to get, guys? You're going to get 5 lakhs 10AA deduction. Do it in these 3 steps. You will not make a mistake. First, you will check the applicability. That is 10AA even applicable for you. Do you have an SEZ unit? Are you manufacturing goods or rendering services from that SEZ unit? Did you set it up on or did you commence on or before 31st March 2020? If all these 3 conditions are fulfilled, you will first of all conclude that okay, 10AA is applicable. Once you conclude 10AA is applicable, check which year are we in right now. Right now, we are in the 5th year. But add a 1 because even the year in which you commenced manufacturing, even that year is going to be considered. So you can say that right now I am in the 6th year. So 6th year means next 5 years. Next 5 years means 50% only deduction you will get. So 50% of the net profit from the export sale, that much deduction you will get. Understanding, everybody? Now, if they're asking us only 10AA deduction. But if they asked you to calculate PGBP in this question, what would your PGBP be? Tell me. What is the net profit? The net profit is 20 lakhs. From this 10AA deduction, you will give how much? 10AA deduction 5 lakhs you will give. So what will be the PGBP of this assessee? PGBP is going to be 15 lakhs. From your net profit number, you will simply subtract 10AA deduction. Simple. Can I proceed? Can I go to the next question? Are we all clear with question number 7? Section 10AA has been revised for us through this question. Let me take you forward, guys. Let me take you to the next question. Till here, I'm hoping you've understood. You have seen entirely about 2 total income questions. Then we've seen a question from basic concepts. We've seen 3 questions from residential status, and this was 1 question from exempt incomes. Through this, 10AA got revised for you. 10AA, I did not bring in a normal question. I brought a question with this freight adjustment. So remember, freight has to be reduced from the export sale number. The turnover numbers should not include freight. If it already includes freight, we are supposed to remove that freight. Simple. Okay, now come to question number 8. Question number 8 is one more question from our exempt incomes chapter. This is an MCQ, but okay, look at this. Which of the following statements is true in respect of taxability of agricultural income under the Income Tax Act? They're asking us which of the statements is true. It is an MCQ question. Okay, now listen. Any income derived from saplings or seedlings grown in a nursery is agricultural income exempt from tax. Do you agree? Yes, seedlings and saplings grown in a nursery. As soon as you see seedlings and saplings grown in a nursery, you will immediately say it is an agricultural income. Whether basic operations, subsequent operations carried on, not carried on, doesn't even matter. Seedlings or saplings grown in a nursery, you will say it is agricultural income, hence it is exempt under 10(1). So which means, do you agree it can't be option B? Yes, it has to be either option A, C or D. Now coming to the second subdivision. Coming to the second subdivision. 60. So this is a true statement. 60% of dividend received from shares held in a tea company is agricultural income exempt from tax under section 10(1). Is it right? See, there's a tea company. This tea company has agricultural income. Is dividend from this tea company also agricultural income? No. Separate legal entity, guys. Company's income is agricultural income, but shareholders' dividend income can't be agricultural income. So dividend income is not going to be agricultural income. Sorry, assessee, this is false. So which means, do you agree it can't be option D also? It can be either option A or option C. It is not option B, not option D. Coming to the third subdivision, while computing income tax liability of an assessee aged 50 years, agricultural income is required to be added to the total income only if net agricultural income exceeds 5,000 and total income exceeds 2,50,000. Which concept are they talking about over here? Which concept are they talking about? They are talking about partial integration method over here. Partial integration method, tell me, when do you consider partial integration method? Net agricultural income should be more than 5,000 and the non-agricultural income should be more than 2,50,000. But here it says total income including agricultural income should be more than 2,50,000. Is it right? No, total income excluding agricultural income. Non-agricultural income should be more than basic exemption limit. So it is not option 3 also. So what is our correct answer? Option C. But still, for the sake of better understanding, can we see this fourth subdivision also once? We've concluded it is option C, but let us once again read the fourth subdivision also. The fourth subdivision says, while computing income tax liability of an assessee aged 50 years, agricultural income is required to be added to the total income only if net agricultural income exceeds 5,000. Till here, is it correct? Till here it is correct. And total income excluding net agricultural income, which means non-agricultural income, should be more than 2,50,000, should be more than basic exemption limit. This is also correct. Yes, 2 conditions, guys. The net agricultural income should be more than 5,000 and the non-agricultural income should be more than basic exemption limit. Only if both the conditions are fulfilled, only then you can apply partial integration method. Is this clear? Come on, tell me, did you understand this part? Yes, this was an MCQ for you. So MCQ, final answer is fine. But through this MCQ, sort of a little bit about agricultural income, a little bit about partial integration method we have ended up discussing. Can I proceed? Can we go to the next question? Question number 9. Question number 9 is going to be a salaries related question. Okay. It's a question with 5 subdivisions, and and this question, they're not asking us tax liability, total income and all. They're just asking us to compute income from salary. So we're going chapter wise now. We did basic concepts, we did residential status, we did scope of total income, we did exempt incomes, and now we're coming to salaries. And before this, we are already done with total income. Question number 8, sorry. Question number 8 or 9? 9. Question number 9. Listen, they're asking us over here to calculate his salary income. Mr. Swaraj has provided the following particulars for the year ended 31st March 19. We're talking about previous year, 18-19 is what we are talking about. The question says, he retired on 31st December 2018. So I have to remember that all the calculations I have to do for how many months? All calculations I have to do only till December, which means all calculations I have to do only for 9 months. He is 58 years old, which means he's not a senior citizen. He rendered service of 25 years and 9 months of service from a private company in Delhi. He was paid a salary of 25,000 per month. Let us handle this. First of all, he has received salary. Salary is 25,000 per month. Only for 9 months I'm going to calculate because he retired in December. So 2,25,000 is his salary. Then comes HRA. HRA is 6,000 per month. Guys, HRA, I hope you remember. HRA, how do you calculate? You always start with calculating salary for the purpose of HRA. How many components of salary, guys? 3 components, right? Basic salary, DA forming part, and employees turnover based commission. Basic salary is how much? We just calculated 2,25,000. What is a DA forming part? Here we did not have DA forming part. Quick glance at the question. Nothing is given to us about DA. No commission also. So what is salary for the purpose of HRA? 2,25,000. This becomes salary for the purpose of HRA of this assessee. Okay, now tell me how many, now I'll calculate exempt HRA. To calculate exempt HRA, how many things will I calculate? I'll calculate 3 things. Number 1, 50% of salary if metro, 40% of salary if non-metro. My assessee is living in Delhi, which is a metro. So 50% of salary, 50% of 2,25,000, that's going to be how much? 1,12,500. What's the second thing? Second thing is actual HRA. How much HRA did we actually receive? Tell me. Actually, we have received 6,000 per month. 6,000 into 9 months, guys. Don't forget, only 9 months. That's going to be 54,000. And third, rent paid minus 10% of salary. How much rent did we pay? 6,500 per month. Guys, 6,500 into 9. That is 58,500. Minus 10% of salary is going to be 36,000. Okay. So out of these 3 numbers, which we are supposed to pick whichever is least. Whichever is least, 36,000, this is exempt. Now this is exempt. So what is taxable? Received minus exempt, it's going to be taxable. I received 54,000, out of which 36,000 is exempt. So the balance 18,000, this is going to be my taxable HRA. Okay, then coming to the next point, on retirement, he was paid gratuity. Through this question, guys, your retirement benefits are going to get revised. On retirement, he was paid gratuity of 3,50,000. He was covered by POGA. So guys, he is receiving gratuity. Let me put down a separate working note for this, working note number 1. Okay, now working note number 1 is all about gratuity. Tell me, how do you start? You always start by checking that when did he receive gratuity? Did he receive gratuity during service or did he receive upon retirement? He has received this only upon retirement. The second thing you check, is he a government employee or is he a non-government employee? He is a non-government employee, because had he been a government employee, it would have been fully exempt for him. He's a non-government employee. Then you will check, is he covered by POGA or not? Yes, he is covered by POGA. Okay, now listen, after this we will calculate the exempt gratuity. To calculate exempt gratuity, how many points will you calculate? You will calculate totally 3 points. Tell me, 15 by 26 or 1 by 2. 15 by 26 or 1 by 2 is covered by POGA. So 15 by 26 into last drawn salary into number of completed service. Right, guys? 15 by 26 into last drawn salary into number of completed years. That is 15 by 26 into, what do you mean by last drawn salary? How many components? Only 2 components. Basic salary plus DA. Full stop. Full stop means what? Whether forming part, whether not forming part, I don't care. I'll take full DA. So what is this assessee's basic salary? Tell me. This assessee's basic salary is 25,000 per month. So how many months basic salary am I supposed to take? Last drawn, only 1 month I will take. So which means 25,000 basic salary. Do we have any DA? We just saw the question. Did we have any DA? We did not have any DA at all. So what is his last drawn salary? His last drawn salary is 25,000 into number of completed years. How do you calculate completed years? Do you consider fraction also? Yes, you consider fraction. If it is less than 6 months, what will you do? You will ignore the fraction. If it is equal to 6 months, what will you do? You will ignore the fraction. If it is more than 6 months, what will you do? Then you will round off to the next number. Here it is 25 years and 9 months. Here it is more than 6 months. So 25 years and 9 months, you will treat as if it is 26 years. Right, guys? Are we clear with this? We'll treat it as if it is 26 years. So 15 by 26 into 25,000 into 26 years. This is going to be how much? 3,75,000. Do we get this number? Then tell me, what's the maximum exemption you can get in your entire lifetime? In your entire lifetime, you can get 20 lakh exemption maximum. Entire lifetime means if you have already enjoyed any exemption, that exemption you will keep subtracting from this number. And finally, what is the actual gratuity number which you have actually received? You have actually received 3,50,000. So out of these numbers, which is your least number? Tell me. Whichever is least is exempt, right? Whichever is least is 3,50,000. That is exempt. So what is taxable now? Tell me. Taxable is what? Received minus exempt is taxable. I received 3,50,000. 3,50,000 is exempt. So how much is taxable? Nothing is taxable. So coming back to my answer, gratuity, if you see, in gratuity, nothing at all is taxable. Okay, this was a gratuity discussion. Then coming to the fourth discussion, he had accumulated leave of 15 days per annum during the period of his service. This was encashed by him at the time of retirement. 3,15,000 was received by him in this regard. Employer allowed 30 days leave per annum. Which concept, guys? This is going to be your leave salary concept. Let me create another working note for this. Let us say working note number 2. So I'm going to start working note number 2 for leave salary. Again, tell me, how do you start? You always start by thinking, did you receive leave salary during service or did you receive upon retirement? Here my assessee is receiving all of this when only at the time of retirement. And my assessee is a non-government employee. Had my assessee been a government employee, I would have said it is fully exempt. Assessee is a non-government employee. Now tell me, how many things am I supposed to calculate? To calculate exempt leave salary, how many things will I calculate? Here I will calculate totally 4 things I will calculate. Number 1, the first number is earned leave. Earned leave into what? Earned leave into average monthly salary. Earned leave into average monthly salary. Now listen, have they given me earned leave? They are saying 15 days per annum and they are saying employer allowed 30 days leave per annum. Guys, maximum leave per year is 30 days. Is that okay? Yes, the rate of earned leave entitlement should not be more than 30 days, which means in a year you should not take more than 30 days. Yes, he did not take more than 30 days. In a year, how many days he took? In a year, he took 30 days only. So which means they are saying accumulated leave of 15 days. Can I take it as it is? Yes. So earned leave is 15 days per year. So 15 days into how many years? 15 days into 25 years. So what is his total earned leave, guys? Total earned leave is going to be 375 days. 375 days is going to be how many months? 375 days is going to be 12 and a half months. Did you understand my working note regarding my discussion regarding leave salary? Yes, I'll repeat once again. Listen, the question says accumulated leave is 15 days per year. Can I take this 15 days number as it is? If this 15 days number is calculated on the basis of maximum entitlement of 30 days every year, what do you call it? We call it as rate of earned leave entitlement. Rate of earned leave entitlement means in a year, how many days leave are you allowed to take? Here he is allowed to take 30 days every year. It should not be more than 30 days. The law says that the rate of earned leave entitlement should not be more than 30 days. Here it is 30 days only. It is not more than 30 days, which means employer has correctly only calculated. So employer is saying 15 days leave every year, which is correct only. So 15 days every year for 25 years, total earned leave is 375 days. Why did I convert it into months, guys? Why did I convert it into months? Because this I have to calculate, this I have to multiply with monthly salary, right? So I need it in months. So 375 days divided by 30, this is going to be 12.5 months. Now into average monthly salary. For this average monthly salary, a separate calculation I'll have to do. Now average monthly salary, guys, see, I'll show you the steps. The same steps you can use for leave salary and the same steps you can also use for gratuity not covered by POGA. Same steps you will use for leave salary and you will also use for gratuity not covered by POGA. Okay, same steps. A set of 4 to 5 steps I'm giving you. The first step, your first step is going to be seeing what is the date of retirement. When did my assessee retire? The question says he retired on 31st December 2018. Okay, then you will check after this what is 10 months before 31st December 2018. What is 10 months before 31st December 2018? What will it be? This is going to start when? This will start from 1st March, guys. 1st March 2018 to 31st December 2018. This is going to be your 10 months before retirement. Now comes step 3. For this period, you're supposed to calculate salary. How many components in salary? You will have 3 components: basic salary, DA forming part, and employees turnover based commission. What is the basic salary of the assessee? The basic salary of the assessee is 25,000 per month. For how many months do you have to calculate? For this period you have to calculate, which means for 10 months you have to calculate. For 10 months, what is this assessee's basic salary, guys? 25,000 into 10, it's going to be 2,50,000. No DA, no commission. So this is going to be 2,50,000. So what do we have in front of us? We have the 10-month salary. But what do we need? We need the average monthly salary. So this is 10 months salary. So what is going to be your average monthly salary? This is going to be 25,000. You always use these 4 steps whenever it comes to average monthly salary for leave salary. Average monthly salary means what? Last 10 months before retirement, that 10-month salary, simple average. That is average monthly salary. And salary has 3 components: basic, DA forming part, employees turnover based commission. So I'll see what is the date of retirement. 10 months before the date of retirement. For this 10 months period, I will find the salary, and this salary is 10-month salary. I will find simple average. Till here, is it clear? Yes, guys. Now listen, had it been gratuity, what would change? Had it been gratuity not covered by POGA, 2 things will change. In a gratuity not covered by POGA, you don't take date of retirement. There you see month of retirement. So month of retirement, you would write December. 10 months before December would be what? Ignore December. 10 months before that would be what? February to November. For this period, you would have calculated salary. Are you understanding? In leave salary, it is 10 months before date of retirement. In gratuity, it is 10 months before month of retirement. Tell me, is this clear? Yes, leave salary is 10 months before date of retirement. Gratuity is 10 months before month of retirement. Okay, so here what is our average salary? Our average salary is 25,000. So 12.5 into 25,000, this is going to be how much? This is going to be 3,12,500. This is our first point. Then balance is simple. 10 into average monthly salary will be what, guys? 10 into 25,000. This is going to be 25,000. Then tell me how much maximum exemption can you enjoy for leave salary in your entire lifetime? Maximum exemption is going to be 3 lakhs. And finally, tell me what's your actual number? How much leave salary did you actually receive? My assessee has actually received 3,15,000. Okay, so out of these numbers, I'm supposed to pick whichever is lesser. Whichever is lesser is what? Whichever is lesser is exempt. So 2,50,000 is going to be exempt. So therefore, what will be a taxable leave salary? Received minus exempt. I received 3,15,000, out of which 2,50,000 is exempt. So therefore, the balance the balance 65,000, this is going to be my taxable leave salary. Right, guys? So coming back to my main answer, taxable leave salary is 65,000. So gratuity, leave salary, HRA, 3 big adjustments revised through this one quest. Can I take you to the next adjustment now? One more adjustment we have over here. Yes, guys, look at this. Company gave him a gift voucher of 5,000 on his retirement. His colleagues also gifted him a mobile phone. What will you do with this gift voucher? Guys, first of all, gift voucher is going to be considered as gift in kind, right? Gift voucher is considered as gift in kind. Now, gift in kind up to 5,000 is going to be exempt. See, actually, if you notice your study material, and even if you look at the Income Tax Act, they say that if the gift in kind is less than 5,000, it is exempt. Okay, they say it is less than 5,000, it is exempt. That's what they say. Even in our study material, they say if it is less than 5,000, it is exempt, which means equal to 5,000 should be taxable. Don't you think? But then, if you look at all the illustrations, if you look at all the suggested answers, if you look at all the RTPs, what view do they follow? They follow this view over here, that up to 5,000 exempt, beyond 5,000, it's going to be taxable. So this is the view that they follow. So that is why even we are going to follow this view. It is up to 5,000. It is exactly 5,000. Therefore, the gift voucher, which is nothing but gift in kind, gift voucher is always considered as gift in kind. This is going to be fully exempt because it is up to 5,000. Tell me, had it been gift in kind, there also do you have, even if it is gift in kind, even if it is gift in cash, do you have the 5,000 limit? No, there, irrespective of the amount, it's going to be fully taxable. Only gift in kind, you have the 5,000 limit. Up to 5,000 exempt, beyond 5,000, you have two options. If it is more than 5,000, either you can tax it fully. Like if it is 7,000, either you can tax 7,000 fully, or you can tax just the excess 2,000. Obviously, both will result in different answers, but both the views are right. So if it is more than 5,000, either you tax it fully or you tax just the excess. Understanding, everybody? Here it is exactly 5,000, hence exempt. And finally, his colleagues gifted him a mobile phone. His colleagues are gifting. So is it going to come under the head salaries? His colleagues are gifting. Will it come under the head salaries? No, it will go to the IFOS head. And under IFOS head, will you tax it? You will not tax it because it is mobile phone. Is mobile phone considered as movable asset? Mobile phone is not considered as movable asset. You know, right? In IFOS, you will tax an asset only if it is, first of all, a capital asset. It has to be a property. You have to be able to call it property. Now, mobile phone, watch, car, all of these are personal effects. They are not capital assets. So if the gift that you're getting is not a capital asset, then you don't tax it under IFOS. So here it is mobile phone. Mobile phone will be personal effect. It is movable. It is used for personal purposes. It is personal effect. Also, it is exactly 50,000. It is within 50,000. In IFOS, when do we tax the gift? Only if the value is more than 50,000. So therefore, this is going to be exempt. So now if you add up, what's the total salary income of this assessee? Total salary income is going to be 3,08,000. But what should I remember to subtract? I should remember to subtract standard deduction of 50,000, which is going to be how much? Which is going to be 2,58,000. Are we clear with this? This is going to be our answer for this question. Yes, guys, HRA revised, gratuity revised, leave salary revised, even gift voucher revised. Gift discussion, you understood? If you're going to get a gift can be gift in cash or gift in kind. If it is gift in cash, irrespective of I'm talking about gift from employer, okay? Gift from employer. If it is gift in cash, it's going to be fully taxable. If it is gift in kind, you will see what's the value of the gift. Is it up to 5,000 or is it more than 5,000? If it is up to 5,000, it's going to be exempt. If it is more than 5,000, you have two views. View 1, if it is more than 5,000, only the excess will be taxable. Or view 2 is that if it is more than 5,000, it's going to be fully taxable. Both the views are correct. Obviously, both the views will result in different answers, but both the views are right. And gift in kind will also include gift voucher I discussed. Okay, guys. So this is it about question number 9. All right, clear with this? Can I proceed to the next question? Your next question is question number 10. Question number 10 is going to be our last question from the salaries discussion. Okay. So come on, you guys, let's go to question number 10. Question number 10 is again from the salaries head. This last question was salaries question, but focusing on retirement benefits. This question is another salaries question, other kinds of adjustments, all the other adjustments basically. So you're understanding the kind of questions which I've brought in. I've brought in those questions which are covering like as much adjustments as possible. Had I brought 2 retirement benefits questions, it wouldn't have made sense. Had I brought 2 questions with these kind of adjustments, it wouldn't have made sense. So this way, even retirement benefits has sort of gotten revised for us. As much as revision as possible is what my objective is through these questions. Look at this question over here. Mrs. Anjali is a finance manager of Anand Construction Limited in Mumbai. She furnishes the following information for previous year 17-18. Okay. And they're asking us to calculate the amount of salary chargeable to tax. They're asking us to find how much salary is chargeable to tax. Now let's look at these points one by one. Previous year 17-18. She was appointed on 1st March 2017 in the scale of 20,000, 2,500, 35,000. You know what this means? This means when she was employed, at that time her monthly salary was 20,000. Then every year her monthly salary will increase by 2,500 till it reaches 35,000. Now, with this information, if I have to calculate her basic salary, how will I calculate? See, she joined on 1st March 2017. So, 1st March 2017, from this date to 28th February 2018, what is her salary, guys? The question says she started in the scale of 20,000, 2,500, 35,000. Have they given to us what was her starting salary in this range? They have not given to us. So we'll assume that her starting salary was 20,000 per month. Okay. Then from 1st March 2018 to 28th February 2019, the salary is going to be what? It's going to increase by 2,500, right? Earlier 20,000 per month. Now it will become 22,500 per month. This will become. Now listen, we are calculating for previous year 17-18. In previous year 17-18, what will the basic salary be? Till February, it's going to be 20,000. Till February means 11 months. So for 11 months, it's going to be 20,000 per month. And then March 2018 alone, it will become 22,500. So 1 into 22,500. Simple, something which you must be aware of very well. A very basic adjustment this is. So till 28th February, that is for 11 months, it's going to be 20,000 per month. And for the month of March alone, it's going to be 22,500 per month. So his basic salary totally is going to be 2,20,000 plus 22,500. This is going to be how much? 2,44,500. No, 2,42,000. 2,42,500. This will become the basic salary of this assessee. Right, guys, till here simple first adjustment this was. Now coming to the second adjustment in this question. The second adjustment said she is paid DA, which forms part of salary for retirement benefits, 30% of basic salary. So her DA is 30% of basic salary. So DA is 2,42,500 into 30%, which is going to be how much? 2,42,500 into 30%. This is going to be 72,750. Now listen, the question says it is forming part of salary, which means wherever we need DA forming part, we can take DA fully. Then she's getting bonus 2 months basic salary at the end of the year. Can you tell me, in the end of the year, what is his salary? Tell me, in the end of the year, what is his salary? In the end of the year. 22,500 or 20,000. End of the year, it is 22,500, guys. So he's getting 2 months bonus at the end of the year. End of the year, his salary is 22,500. So 22,500 into 2, how much bonus is he getting? He's getting 45,000 bonus. Okay, this also understood. Then she receives 2,000 per month as transport allowance for commuting between home to office and office to home. Transport allowance, you will get exemption only if you're blind, deaf, dumb, orthopedically handicapped employee. Here, nothing like that is given. So therefore, Therefore, the transport allowance is going to be fully taxable. So 2000 into 12, that is 24,000. This is going to be fully taxable. Now coming to the next point, she is also getting 4,000 each as hostel allowance for 3 children. Hostel allowance, how much is exempt? Tell me. 300 per month is exempt. For maximum how many children? For maximum 2 children it is exempt. So if you look at children hostel allowance, how much did we receive, guys? We have received 4,000 for 3 children. Tell me, is it 4,000 per month? No, they are saying 4,000 each for 3 children. So 4,000 for 3 children. 4,000 into 3 we have received. Out of this, how much is going to be exempt? 300 rupees is going to be exempt. Per month it's going to be exempt, but only for 2 children it's going to be exempt. So we have received 4,000 into 3. 300 into 12 into 2 is exempt. So what is going to be taxable now? 300 into 12 into 2 is exempt. That's going to be taxable 4,800. Do you get this number, everybody? Taxable children hostel allowance 4,800. Right, guys? This was my next point. Now look at the next adjustment. She contributes 15% of salary, basic plus DA towards RPF, and company also contributes the same amount. See, they're not asking us to calculate total income and all. They're only asking us to calculate taxable salary. So here they're talking about, in this adjustment, her contribution also, her employer's contribution also. Tell me, will I even consider her contribution? Where will her contribution go? Her own contribution will go to ATC, guys. It will go to chapter 6A, right? But am I going to do chapter 6A calculation here? No, because only taxable salary they're asking, not total income. So own contribution, I will not bother about in this question. But what about employer's contribution? For employer's contribution, I'll have to do one proper working note. Right? Employer's contribution, let us say I'll do working note number 1. Now, working note number 1, employer's contribution. We'll follow step by step. First of all, we will compute salary for the purpose of RPF. Salary will have how many components? Salary, we will have 3 components, guys, because RPF will have 3 components: basic salary, DA forming part, and employees turnover based commission. What is the basic salary of this SSC? For this year, the basic salary of the SSC, we've already calculated. Basic salary is 2,42,500. And the question had said DA is forming part. So DA 72,750, fully I'm going to consider forming part. Employees turnover based commission is not given to us. So what is the salary for the purpose of RPF? For the purpose of RPF, the total salary is going to be 3,15,250. Am I right, guys? Then tell me, what is the actual contribution? How much did they actually contribute? How much did they actually contribute? The actual contribution is 15% of salary, basic plus DA. Actual contribution is 15% of basic salary plus DA. Actual contribution is 15% of basic salary plus DA. Are you noticing I am not writing this number as it is? Because tell me, this number is supposed to be used for what? This number is supposed to be used only to find the exempt contribution. Exempt contribution will be 12% of this salary. So 12% of 315,250. This is going to be the exempt contribution, which is 37,830. Okay, but what is the actual contribution? Actual contribution has to be on the basis of information given. Actual contribution is 15% of salary. Actual contribution is 15% of basic salary plus DA. So actual contribution is going to be how much now? Calculate and tell me. Actual contribution is 47,288. Right? So what is going to be the taxable contribution? I received 47,288, out of which 37,830 is exempt. So what is the balance now? The balance 9,458. This is going to be my taxable contribution. Did you all understand? Yes, actual contribution is not 15% of this number. This number is supposed to be used only for one thing, and that is to calculate exempt contribution. Actual contribution will be on the basis of numbers given. They said basic salary plus DA. So that is what I calculated. This is not basic salary plus DA. This is basic salary plus DA forming part plus employees turnover based commission. This is that number. In this question, it so happens that these two numbers are the same, but you can't take this number as it is over here. You can't write this number as it is over here because the question says actual contribution is 15% of basic plus DA. So you have to show that calculation. Is this clear, everybody? So what is a taxable employer's contribution? 9458. Now look at the next adjustment after this. Lunch provided by the company during office hours cost to the employer is 10,000, guys. We have lunch perquisite. The value received is 10,000. Tell me, how much exemption will you give from this? How much exemption will you give? 50 rupees per meal per day. So 50 rupees into 365 days, let us say, 50 into 365 is going to be 18,250. Tell me, can your exemption be more than what you are receiving? Can you have a negative number? No. If you have a negative number, you will restrict it to 0. So lunch perquisite, we have 0 only, nothing is taxable. Then we have rent-free accommodation, RFA. See, HRA adjustment I already showed you in the last question. RFA we will do in this question. Whenever we have RFA, we always do this adjustment towards the end. So we'll do this towards the end. Then company reimbursed medical treatment bill of 35,000 of her son who is dependent on her. Medical bill reimbursement, guys. Tell me, is it in a government hospital? Tell me, is it in a hospital which is recommended by the Chief Commissioner of Income Tax? Is it in a hospital which is owned and maintained by the employer? No. So therefore, this reimbursement, what's going to be the tax treatment? This reimbursement is going to be fully taxable. The amount is 35,000. It's going to be fully taxable. Okay, then tell me correctly, guys. Gift voucher of 6,000 on the occasion of marriage anniversary. Gift voucher. Tell me, gift in cash or gift in kind? Gift voucher is going to be considered as gift in kind. Gift in kind, what's the limit that comes to your mind? Tell me, what's the limit that comes to your mind? 5,000. It is more than 5,000. So either you can say 6,000 fully taxable, or you can say 1,000 only excess is taxable. Let us say the excess 1,000 is taxable. I'll write that over here. But note that you can also write full 6,000 is taxable. This is also done. Then laptop and computer facility. Guys, tell me, facility of laptop and computer, what will your answer be? Facility of laptop and computer, this is going to be fully exempt. Okay. And then professional tax paid by the company. What about professional tax? Listen to me. Professional tax may be paid by the employer or it may be paid by the employee. But professional tax is actually whose obligation? Tell me. It is actually whose obligation? It is obligation of employee. Now listen, if the professional tax is paid by employer, don't you think it becomes a benefit for the employee? My obligation, employer is paying. It is definitely going to be a benefit for the employee. So if it is paid by the employer, it's a benefit for the employee. It will be taxable for the employee. Okay, then the total professional tax, whether paid by employer, whether paid by employee, the total professional tax, you will get section 16 deduction. Mahalakshmi, you can't call it exemption. It's a deduction, not an exemption. It's a deduction, right? So we'll see what's a professional tax, how much is paid by the employer, how much is paid by the employee. Whatever is paid by the employer, it will be taxable for the employee because my obligation, employer is paying for me. So it's definitely a benefit for me. It will be taxable for me. Total professional tax, I will get section 16 deduction. Now here, if you see professional tax paid by the company, no amount is paid by employee. Employer is paying 2,000. Benefit for the employee, guys. So therefore, I will tax it. Professional tax, how much I will tax it? 2,000. I will fully tax it. Everything is done. Only one thing is left. And what is that one thing? RFA is left. Rent-free, unfurnished accommodation provided by the company. Company pays 60,000 per annum. One added motivation you have to complete your intermediate examination somehow in November 2023. Because if you come to May 2024, this RFA adjustment has become such a nuisance after the new amendment. Okay, there's a big huge amendment in RFA, because of which it's become a big huge nuisance. So you make sure you somehow get done in your November paper so that you don't have to go through that nuisance once again. Understanding? Let that be one added motivation for you. Listen now. Anyways, coming back to rent-free accommodation, the first thing that you check, is my employee a government employee or a non-government employee? He's a non-government employee. Then what will you check after this? Is the house owned by the employer or is the house taken on lease by the employer? Here the question says company pays 60,000 per month. So company is paying rent, guys. So is it owned by the employer? No, the employer has taken it on lease. When the employer takes it on lease, how many things do you calculate? two things you calculate, 15% of salary or lease rent paid by employer. Out of these two numbers, whichever is lesser. Good. Whichever is lesser is what? Whichever is lesser is taxable. Whichever is lesser is taxable. Now this 15% number, will it change with change in population? No, it will not change with change in population. This 15% number will stay the same only. Now tell me, if you want to calculate salary for RFA, how many components do you have in salary? How many components? Number 1, you have basic salary. Number 2, you have DA forming part. Number 3, commission or all commission. You will have all commission, whether turnover based commission or not doesn't even matter. Then you will consider bonus, then you will consider fees, and then you will consider all taxable allowances. Now in this question, what is our basic salary? The basic salary, any change in the salary during the year, by the way? Any change during the year? No. Why am I, no, there is a change, there is a change. See, in the month of March, salary is changing, right? So why am I asking you, is there a change in the year or not? Why should we know if there is a change in the year or not? Why are we doing that? Because we have to split, right? See, even for RFA and even for HRA, whenever there is any change during the year, we are supposed to split the year, right? So here, if you see March month onward, salary is changing. So we'll have to split this entire calculation into two parts. First calculation will be for April to Feb, that is for 11 months, and the last calculation will be just for the month of March. Now, how much basic salary do we have? April to February, if you see, basic salary is 2,20,000, and March month the basic salary is 22,500. Then coming to DA. DA is going to be which number? DA is 30% of basic salary. So we can calculate from here. 2,20,000 into 30%, 66,000 here, and 22,500 into 30%, which is 6,750. This is full DA. The question is saying DA is fully forming part, so I'm taking it as it is. We read the whole question. There was no commission. Do we have bonus? Yes, we do have bonus. How much bonus do we have? We have bonus of 45,000. Now this 45,000 is bonus that we got for rendering service for the entire year. So 45,000 I will split between both the parts. So 45,000 into 11 by 12 is how much? 41,250, and 45,000 divided by 12, and for 1 month it is 3,750. No fees. Do we have taxable allowances? Yes, we have transport allowance, children hostel allowance, too we are having. Both put together is how much? Both put together is 28,800. Now this 28,800 is for the whole year. So what is for 11 months, guys? 11 months will be 26,400, and for 1 month it's going to be 2,400. So if you add up, what is the meaning of salary for the purpose of RFA? Salary for the purpose of RFA will now be 3,53,600 here, and 22,500 plus 6,750 plus 3,750 plus 2,400, 35,400 here. Okay, these are the salary numbers. Till here clear? Now tell me, we need to calculate two things. Number 1, 15% of salary, and what else will we calculate? One is 15% of salary and the other is lease rent paid by employer. Out of these two numbers, we'll pick the lesser number. So what is 15% of salary? Calculate and tell me. Here this should be 650. Okay, 353, 650 into 15%. This is going to be 53,048. And there it's going to be 5,310. Now, how much rent is paid by the employer? 60,000 per annum, guys. 60,000 per annum. So, how much is the rent paid per month? Per month, the rent paid is going to be 5,000. So, 5,000 for 11 months is going to be 55,000, and 5,000 for the month of March. Now, out of these numbers, we are supposed to pick whichever is lesser. So, April to Feb, which number will you pick? 53,048. March month, which number will you pick? 5,000. So can you tell me what's the total taxable value? 58,048. Are we understanding? Is this making sense to us? Yes, here it is unfurnished accommodation, so I will stop here. But had it been a furnished accommodation, to this I would have also added the value of furniture, guys. How do I add the value of furniture? If the furniture is owned by the employer, you will take 10% per annum of the cost of the furniture. If the furniture is taken on hire by the employer, you'll take the higher charges. Then you will get the furnished accommodation value. Then here it is rent free. But don't you think there's a possibility that employer could have collected some small amount of rent from the employee? So had we collected rent from the employee, we would have subtracted it. If the employee was paying rent, we can't call it rent free anymore. There, what will we call it? We will call it as accommodation at concessional rent. Here we don't have all that. So 58,048, this is going to be our RFA number, 58,048. Now tell me, what is a gross salary? Gross salary, guys. Gross salary is going to be 4,94,556. Do you get this number? This is our gross salary. From this section 16 deductions, 50,000 standard deduction you will get. We have professional tax also. Professional tax only paid by employer. Total professional tax is 2,000. We'll subtract that also. So what is our taxable salary now? 4,42,556 taxable salary. Should I round this off? No. I round off only the total income number and I round off only the tax liability number. Are we clear with this? Yes, guys. So with this, we are done with both the questions from the salaries chapter as well. All right. Through the first question on salaries, we revised retirement benefits. Through this question on salaries, we revised all the smaller adjustments. Now, even after this, I would suggest please go through the pension adjustment once again on your own and go through the motor car perk visit also once on your own. These two are important, but these two did not get covered through this question. But just run through these two provisions once on your own. Even these two are important. All right, guys. So with this, we are done working out the first 10 questions out of our 30 questions. All right. With this, I think we'll close over here. We've done quite a lot of coverage. I think we tried to go as much in depth as was possible in this much time, right? I don't think beyond this, it was even possible in this time, right? So I think we've done good amount of coverage. So I think we'll close over here. I'll see you again tomorrow. Tomorrow, we will start from question number 11 onwards. All right, tomorrow we'll try to complete as many questions as we can. So I'll see you tomorrow at 7:30 again, and that's when we will resume. Okay, thank you so much, guys. Bye-bye.